for everyone within the industry. So long as you are involved in consuming IT-enabled services, it's for those that are involved in IT-enabled services. So either you are consuming or you're providing the service or you are supporting the services, and each and every one of us is involved in the journey of creating a service management that delivers the expected value, that delivers the expected outcome to the consumers. Now, and not focusing on delivering output, which is what IT used to do, is focus on output delivery and neglecting that the outcome is what the customers are paying for. So that's what we'll be looking at in the journey of this course. So do not think that, oh, because I am a credit person, I am not supposed to do ITIL. That's actually a wrong notion. And some options have actually adopted this, and they understand revolutionize the culture of each organization that adopted this service management. Now, ITIL is owned by by Axelos, is the name of the, as you can see from my slide, but the ITIL is delivered through PeopleSat, and MAP Technology, being a licensed partner, will be anchoring this course for you on leveraging these particular organizations' resources, as well as through the vendor that provides the material, Van Haren Publishers. Okay. Now,
we can't see your screen. Can you please share your slides
again? Sorry, please. Please, someone should always remind me anytime the slide is not up, please. Because I'm going on full screen right away. Okay. All right, so what I need from you is your active participation. Ask questions. Then there's going to be a lot of theories in this course and homework. There could be some exercises. We might not be able to give you homework based on the volume of people we have here today. Now, you are also supposed to tell us who you are, but considering the volume of the people we'll be dealing with, we will not be able to do that. So just note that here, the person delivering the course for you is a certified trainer by name MAP Technologies, and also Mr. Apollos being the trainer that will be leading the course for this particular 3 days. Now, ITIL has these following things that version 4 is there about. But before the version 4 of ITIL came, there used to be what we refer to as normal ITIL. Before we have the V2, normal ITIL was just focused on the delivery of IT, basically IT services, supporting people in projects, and based on what we saw in the time when we have UK, when the course was actually first established in UK by Office of Governance of UK, by people who are doing work and think of how best to can actually support those involved in delivering their services, that they came up. It was basically IT course as at that time. Then after that incident, we were able to move to V2. At V2, we had 2 sections of ITIL, which was like service delivery and service support. So that was the major 2 things, which was still centered around the IT delivering or running their show without linking to the business at that time. Then from V2, we moved to V3. V3, we had 5 sections. It was referred to as a life cycle of service management, where we have service strategy. We have, again, those that involve in decision making. Then we have what we call them service design. Then we move from service design, we have what we refer to as service transition. Then we bring it to service operation, and we have the continuous service improvement, CSI. So those were the 5 core courses we had in ITIL version 3. And then it was more like a segmented process, whereby each person focused on what they what is my own responsibility in this journey. And once I've been able to provide my responsibility, it is left for the other person to do their part. So we are not looking at the end-to-end delivery of the services. Most of the digital components of our IT delivery services was not captured. Cloud computing was not captured at that time. So, and then that became a kind of a gap in the delivery of our services, which prompted the emergence of IT version 4. IT version 4 came in and now think about how do we connect all the components of service delivery from the point of service demand to the point of value realization. So it tried to focus on an end-to-end delivery of a service, not looking at the segregations that were there previously. Whether you are a developer or whether you are an IT operation person or whether you are a business person or a business analyst, all what you want to see is that the customer that is making the request for the service is getting value. We are not interested in your internal politics. If FirstCentral Credit Bureau is not giving value, we do not want to base our judgment that, oh, it was the developers that failed or it was the marketers that failed. We want to see FirstCentral as being the company that has failed in the delivery of their service. So no matter who is involved in the channel of the service they need. So the consumer of the service is interested in seeing only one channel from the point I place my demand or place a request on a service to the point where the value is being delivered. That is what version 4 has come to do. So, and that's led us to what we have now created as a service value system, which links all the resources of the organization, considering both your tangible and intangible resources of the organization, your policies that you have, the organogram of the organization, the communication system, the culture of the organization, roles and responsibilities, the information and technology that you use in delivering the services, the partners and the suppliers you use, as well as the coordination of the activities. All these linked together, all what we want to see is that the value has been delivered to the consumer, and that's all. So if that is not being done, then you have failed your customers or your consumers of a service. So these are exactly what the journey where we are right now, and we are going to be looking at this in these 3 days. So how do we achieve this? But we have to look at the dimensions of service management. We want to look at what value creation is all about and what value means. Of course, from previous versions, we had what we call value creation, but in version 4, we focus on value co-creation by making sure that all the people, the parties involved in the service delivery are actually considered from the onset until the time the value is delivered to the consumer. Then we want to understand the meaning of outcome and the difference between outcomes and outputs. Then the impact of cost and risk with respect to service delivery. Then services, what services means and the relationship of service in service management. Then the dimensions of service management. We want to look at the 4 dimensions of service management, or what we refer to as the 4 P's of service management in the previous version of ITIL. And then we want to look at the service value system, which is the main factor coordinating all the activities together. Then we want to look at the principles that can guide action in their decision making, or what we refer to as the guiding principles of ITIL. And then we look at the service value chain as being the engine or that controls all the activity, the 6 key activities that we need to transform and input or demand into value realization. Then we proceed to look at some aspects of the practices of the organization. Now, remember in IT version 3, we used to have what we refer to as the processes, and then we have 26 processes. But today, we are now having what we refer to as practices, and we have 34 practices. So IT version 4 covers the 34 practices that can guide all the way you do things as an organization. So these are the things we want to be looking at. Under practices, which is grouped into 3, We have the general management practices, which is 14 in number. We have the service management practice, which is 17 in number. We have the technical management practice, which is 3 in number. All of them giving us a total of 34 practices. But of course, in version 3 foundation, we only cover 15 practices at this level. Then other ones are covered at intermediate level. So, and out of the 15 practices, for those that may want to write the certification examination, 7 of the practices will be discussed in detail. So, and I'm going to show you those practices as we progress. Now, ITIL over is ITIL has evolved over the years. Now we have moved, okay? Can you still hear me, please?
Yes, we can hear you, sir.
Can anybody hear me?
We can hear you, sir.
Thank you. All right, thank you. Thank you. All right, so we have moved from, thank you. So we have moved from process focus, and then each person tried to focus I'm a support guy, is what they give me, I'm going to support. I'm a strategist, I've done my own. I'm a designer, I've designed my work. Boom. So we say no, we want to view the whole work now as a unit. So holistic view of the service is what we focus in IT version 4. From fragmented life cycles of service design, transition, service operation, and so on, to looking at end-to-end visibility from point of demand to point of value realization. And we've also moved on from major releases to continual improvements. From major release to continual improvements, where we, instead of first focusing on waiting until we move from a version of banking application. Am I correct? Most of the financial banks here, the core banking applications, some people use FlexCube, some use other core banking applications they use. Now, assuming you are a Finacle banking application institution and you are in Finacle 10, and organizations are requesting in Finacle 11. So you cannot say your customers should wait until you migrate to 11 before they have access to such functionalities in the core banking application. So what do? They may try to say, let's look for a way of customizing that and bring that. So that's what we refer to making sure that it has a continual improvement, giving your customers what they need, even when you have not reached the point where you have not migrated to the full or latest version of that application. So that's what we are talking about, from major releases to continual improvement. Now, from operational silos to flexible value systems. Now, in organizations, we have what we refer to as silos. Silos are actually a cankerworm to the organization, be difficult to move forward in organization. They make communication so difficult. Silos in organization do not share information. Silos in organization do not like to teach others what they know, and they like to hoard knowledge. And that's actually things that makes it difficult for us to be agile and resilient as an organization. So we want to move from that. Silos can be done by individuals, or by structure of the organization can also create silo in organization. So IT want to bridge that gap and create a system where we do not base on a superstar, but we base on a system that works. So of course, those who have adopted IT guiding principle, IT practices since 2011 version of the version 3 has actually started reaping the benefit of this. Now, from principle as a central element or theme of our service delivery. Now, you can agree with me that a lot of us growing old, one of the things that happens to you is that if your dad tell you to sit down here, you sit down where they ask you to. Those a bit older, not the Gen Zs now, per se. When they say sit down here, you sit down there, you don't move. But today, can anybody answer me? You have a daughter that is 5 years, 6 years, you say sit down. What would your daughter tell you? Can somebody talk, please?
Hey, why do you want me?
I think it
Why?
is why.
Why do you want me to share?
Your
Hello, the
daughter
teacher
will
will
ask
want to know
you
why.
Why should I sit down?
Why?
You ask
Why
why.
do you
I
want me
love
to
that.
sit down
Thank you.
exactly?
I love that. Thank you. Now, that is because we are in an era of principle. Tell the people the reason you are embarking on an improvement journey. Every improvement journey must have an objective. It must have a purpose you are trying to fulfill. If not, rumors will prevail. So when you are coming, instead of making people a rule in organization, what you must do, create a principle and let people understand the reason why they are doing what they are doing. So that's why we say that your frameworks, all your frameworks now that must satisfy this age and season must be based on principles. So that's why we have moved from rule-based organizations to principle-based organization, where the reason or the purpose of what we are doing is being made known to the people. Now, we also move to the era where we talk about right now. What is different between a product and a service? Or are you a product delivery option or a service delivery option? What will you tell me? As a financial institution, are you which one do you belong to? Product or service?
Service.
Service.
Service delivery.
Right? You say you belong to service. Am I correct? Yes.
Yes.
Okay, that's good. Now, however, it is important to let you understand that every organization has a product. Every institution, every firm, every establishment has a product. It is your product you use in offering service. As a financial institution, you have products and you use your product to offer services. You cannot deliver a service on a product you do not have. So what do we mean? So that's why we say that the services that an organization provides are based on one or more of the products of that organization. Because product is the configuration of organizational resources which is designed to offer value. So whether you are talking about your banking services or your loan application, you have different product or different loan packages that you give out as a credit giving organization, or you give out some goods on credits. So you have a product. It is the product that you use in delivering a service. So every organization has a product. So products are configuration of your resources created by the organization that will potentially be valuable for the customers of that organization. A good example, FirstCentral has products. FirstCentral has a product like what do you call it? Maybe you have reports that you give out. Am I correct? Am I correct?
Yes, sir.
Yes, sir.
Yes,
All
we
right.
can hear.
So they have a product. When you say a product, it means there is a policy guiding the use of that thing. There is a process guiding it. There is a procedure or method of consumption of that particular services. And again, they have the people, they have the skill set to deliver on that. They have the partners and they have suppliers that can support them. They have the right technology and tool to deliver, and they have a coordinated approach of delivering the product. That particular service, that's what we refer to as now the configuration of their resources, which is designed to offer value to the customers. So again, let's not be how do I put it? Let's not be focusing on whether we are a product or service delivery organization. Rather, let's focus on understanding the product we have as an organization, which should be valuable in meeting the needs and expectations of our customers. Because customers do not pay for your products. Customers do not pay for your services. Customers pay for their needs. Did you get me? Did you get what I said?
Please, can you come again?
Please, can you take that again?
Customers do not pay for your products. Customers are not ready to pay for your services, but they are ready to pay for their needs. Are you with me?
Yes.
Yes.
Yes. So what do you think that they are paying for is your product, but that's not what they are paying for. What they are paying for is their
excuse
need.
me, sir. Can I ask a question?
Yes, go ahead.
How did you come about that when you say customer does not need our products?
Okay. Now, FirstCentral has a product they called what do you call it again? Consumer credit score. Am I correct? Consumer, what do you call it? S-score, consumer credit detailed report or thereabout.
Yes, sir. You're right, sir.
You're right, sir.
Somebody should help me. Am I correct?
You're right, sir.
Are
yes,
you
right,
saying that that product, you as a financial institution, can you please pay attention? Now, which bank asked the question? The person asked the question, which bank are you from?
I'm not a banker, but I'm a real estate consultant.
You are what?
Thanks.
I can't hear you. Consultant.
Okay. Okay, real estate consultant. Fantastic. Real estate consultants. All right. As a real estate consultant, when I am coming to you, I am not paying for instance, I'm not paying for I'm paying for my accommodation where I can lay my head on and rest. That's what I need. So if a credit bureau is coming to you, a bank want to consume credit bureau, what do you call it, reports. Now, they are not paying because they love the report of credit bureaus. They are paying because the report will help them in their risk management. Am I correct?
Absolutely, sir.
Yes.
Are you with me?
Yes, we are with you. Please.
So what the bank are paying for is for their risk management in order for them to manage the risk involved in giving out a facility to a customer who is already heavily indebted. So meaning that what they want to do is, how do I get a customer who I will give my credits, who will pay back in due time, so that I can still have my money to record to actually recirculate for other things. That's what they are paying for. It's not because they love the report. If a carpenter is trying to drill a nail on a wall and he needs a hammer, he's not paying for the hammer, he's paying for the hole he's drilling on the wall. Are you getting what I'm saying? Are we together?
We are together. Please go ahead.
All right. So what we are saying in essence is this: until your product or the service you're offering is able to meet the need of the consumers, your service will not be acceptable to the consumer. So every service you're delivering, you must look at your service catalog or your service portfolio and match the content of the services in the need of the consumers of the services, and then or concept of service management. Now, most organizations need to address the service management challenges and utilize the potential of modern technology. And ITIL is designed to offer you a flexible, coordinated, integrated system, which we refer to as a service value system, for effective governance and effective management of your IT-enabled services, not IT services. So our focus is not on IT service, but on IT-enabled services. So the key terms we want to consider here are what is an organization? Organization does not mean somebody is registered as CAC. No. What is a service? Who is a service provider? Who is a consumer of a service? What are the other stakeholders involved in the chain of service delivery? What is product and what is a service? And what are the nature of value and value co-creation? What is relationship with service management? And what is relationship of value with respect to outcome, cost, and the risk? How do we measure the achievement of value with respect to meeting the intended outcome using optimized cost and optimized risk in achieving that. So of course, these concepts apply to the auctions and the service regardless of whether the auction is a government or whether it is you are using a any form of technology or not, whether it's a private organization or not. It applies to all auction and all layers of technology. Now, what is service management? Before I talk about service management, I would like us to look at what is service. What is service? Service is a means of enabling value co-creation. Underline the word value co-creation. For those coming from ITIL version 3, it was referred to as value creation. But now we have what is called value co-creation. Underline the word value co-creation. By facilitating dash, underline the word outcomes, not an output. And again, so facilitating outcome that the customers or the consumers wants to achieve without the customer or consumer having to manage specific cost and risk. Again, I say service is a means of enabling value co-creation by facilitating outcomes that the customers wants to achieve without the customer having to manage specific costs and the risk. Now, underline the word outcome. Underline the word value co-creation. Underline the word cost and risk. Very, very important. Now, for every service you deliver, your intention is for you to deliver the expected outcome. But in most cases, people focus more on delivering outputs, not outcomes. What do I mean? Application. Am I correct? Am I correct?
Yes.
Okay. Now, at the point of launching the mobile application, what was the intention of FirstCentral Credit Bureau to launch the mobile application? Launching a mobile application and celebrating that the mobile app has gone live is only celebrating an output, not an outcome. Outputs, organizations are not interested in output. They are focused on outcomes. So what do I mean? Now, if I have a mobile application, the question is, what was the intention of FirstCentral Credit Bureau before they created the mobile application? As a financial institution, when they created the mobile application, what was the intention of the mobile application of your bank? Maybe the intention was to decongest the financial institution, the banking halls. The intention was to create the convenience for people to transact so that I don't need to owe a bank in my village before I can open an account in that particular bank in my village where I am. So that was the outcome they wanted. They wanted a situation whereby, people can have access to FirstCentral Credit Bureau report from anywhere they are. Individual can check it, have access to their scores so that they are not being caught unawares that, my score is bad. Maybe at the point where you need to get the employment or where you need to get a loan, you are not saying your customers are still saying that, they are not aware that they are being reported or that their records are not being updated. So based on that, they want to ensure that every individual in Nigeria are at ease by making sure that update happens. That's the intention. So, but when the confidence is not achieved, then you have only delivered an output and not an outcome. Does that make sense?
Yes,
are we together?
Can you come again, please?
Organizations. All right. Organizations focus on achievement of an outcome, not an output. So your service delivery should focus on delivering outcome to the consumers, to your users. If the outcome is not being achieved, if all what you have is an output, that particular product have not succeeded. So you have a product you deliver like a mobile app. It's an output. Now the output is what assists you in facilitating the outcome. The outcome is the intended result you wanted to achieve by the consumption of that service. So if you release a mobile application that was intended to make sure that it decongests your banking hall, but your banking hall is still being crowded. You have not achieved your outcome. So you only have an output. That means the objective of that has not been achieved. Is that okay?
Okay, it's okay.
Are we together?
Yes.
Yes, we are together.
All right. So ITIL is focused on delivering outcomes, not outputs. So service and organization providers are based on one or more of their products. Organizations own and have access to a variety of resources. Example, the organogram, the tools, the skill set of the people, their documentations you have. These are part of your resources of your organization. Okay, your partners and suppliers, your coordination, your process, your policies, your processes, and your methods or your structures. These are part of your resources. So products are configurations of these resources created by the organization that will potentially be valuable for the customers of that organization. So again, products are a configuration of an organization resources designed to offer value for a customer. So when you offer products, all what you are offering is a tool to render a service. And when you give service, your service is assisting the people to achieve the intended outcome. So when the outcome is not being achieved, then we say the value is not being delivered. That's why you notice sometimes a lot of people in IT will always quarrel with the business. Why? Because or they'll show they are providing services. You ask them, your service you're rendering, is it giving value? They say yes. What will you measure? They measure mean time to restore service. They will measure the what do you call it? Percentage availability. They measure change management they have done, and we refer to those as low gauge indicators of the success of a service, because that's not a measure of the source of a service. As a watermelon effect in service delivery. Why you are believing as an IT person, as an IT operation person, for instance, you think that I've delivered value because we resolve all incidents. We are resolving all the change that has happened. We are doing effectively on changes. We are mean time to restore is effective. Availability is 99.9%. But customers is saying I am not getting value, and you are arguing and showing charts. You can continue to show charts and histograms and all the things you have plotted, and the cost will leave you to move to a better place where you get the value, because you are not measuring the right matrix. It's not linked to the outcome that you are trying to measure. And that's what we refer to as watermelon effect in service management. When your outcome is not linked, when the metrics you are using to measure the success of a service is not linked to the outcome you want to achieve, it's referred to as a watermelon effect in service management. Mr. Charles, can you ask your question, please, briefly?
Okay, so that I know, sir. Good morning, sir. Good morning, everyone. Yes, I know there are terms we'll be using frequently or interchangeably in this session. Consumer, customer. In your own opinion, sir, what is the difference between the customer and the consumer?
Okay. You are jumping the gun.
Okay.
Okay.
Okay, sir.
Now, a consumer is a bucket. A consumer is a bucket that contains customers, users, and sponsors. Inside a consumer, you have a customer. A customer is a role. A customer is a role that defines requirement of a service and take responsibility for the outcome of a service consumption. Is part of the consumer group. A user is a role that uses a service. Is part of the consumer group. A sponsor is a role that defines budget for service consumption. Is also part of a consumer. So when I use the term consumer, I'm talking about generally. But when I talk about customer, I am being specific to a particular role who defines requirement of a service and take responsibility for the outcome of service consumption. Is your question answered?
Yes, sir. Thank you so much.
All right. So again, what is service management? Having to look at what a service is. What is service management? Now, service management is a set of specialized organizational capabilities. A set of specialized organizational capabilities, not resources. There's a difference between resources and capability. Resources are head counts of the organization. Human beings can be grouped as a resource or as a capability. When you are a resource, it means that you are a head count. You need to be managed. You are a configuration item that needs to be managed in order to deliver a value for the organization. But when you are a capability, means that you can take decision. It means that this is somebody who can take responsibility for their action. These are people who you can rely on. When you have a set of resources in an organization, you can have 20 people in a department. Out of 20 people, you have 15 resources and 5 capabilities. What do I ask them to on the AC? Off the AC when you are going home, they will off the AC. Tomorrow you ask them again, off the AC, they will off it. The next day you go out, you do not come back on time, they leave the AC on and go home. That is called a resource in organization. So that's why when people like us in service management, we don't want you to refer to us as a resource person. We are not resource persons. Resource person to a service management person is actually you are diminishing the worth or the value of the person. But when we talk about capabilities, yes, this person is somebody who has acquired knowledge and skills. So these are people that can actually assist you in creating the value. So auctions are focused on this set, which is what we use in enabling value co-creation for customers in the form of your service delivery. Are we together? Are we together?
We are with you. We are with you.
All right. Thank you. Now, developing the capabilities requires a proper understanding of what nature of value means, the nature of the stakeholders involved in the value creation or the value consumption, and how value creation is enabled through services. Now, for instance, let's assume, fortunately, I don't know the names of the people that are here. I'll try to see. I saw a Damilare here, right? Damilare, am I correct?
Yes, sir. Yes, sir. You're right, sir.
Yes, Damilare is there.
Okay. Now let's say there's a Damilare here, and there is maybe another person here. Let's say an Amina, and these are two people who are looking at each other. Maybe Damilare has interest in an Amina, for instance. And Amina has been watching Damilare, and Amina's birthday is coming very soon. And Damilare now go ahead and purchase a gift to give Amina. So I'm giving Amina the gift. Amina opened the gift, and it was excited that, oh, this young man has come forward with a gift. And the gift was opened. Maybe Amina did not want to wait for everybody, just say, bring, because this is coming from the hottest guy in town I'm looking forward to. And once he opened the gift, he noticed that what is contained in the gift is actually a Nokia 3310. How will an Amina feel? Hello?
Amazed.
Do I have any Amina here?
She will feel disappointed.
So why? Why should Amina feel bad that you got
17 Pro Max?
I was expecting more.
Oh, you were expecting more.
Yes, it's below expectation.
Okay, that's fantastic. Okay, that's okay. That's okay. Now we are coming. Let's take it easy. Now, let's assume that this same phone that was given to Amina, and Amina traveled to the village and meets the grandma, an illiterate grandma in the village, and gives the same Nokia 3310 to the illiterate grandma with an iPhone 15 Pro Max. Which one do you think that grandma will prefer?
The Nokia.
She prefer
the Nokia, because it's easy for her to use.
Fantastic. So again, that's what we refer to as the nature of value and value co-creation. Who is the stakeholder involved in the value consumption? To Amina, if you are giving Amina something, why is it that he didn't like that? Because what you are giving to her does not support the work she's doing, for instance. The question is, why do I need a phone? Amina needs a phone which she can use to check her mail. She needs a phone she can use to do some transaction. She needs a phone she can use to do some Snapchats. she can use to do some TikTok, to post her pictures on the Instagram and Facebook and everywhere. And you are giving her, 3310. But a grandma in the village is looking for a phone that can last for the next 4 days, even when there's no light. The grandma is looking for a phone that can use the torchlight to see. He's looking for a phone that is easy for her to operate. That's what we refer to as the nature and the scope of the stakeholders involved. Does that make sense?
Yes.
Are we together?
Yes, yes.
The same products, but different value.
Yes.
Okay. Sorry. Was this? Okay. Okay, shall we?
Let's continue.
All right. So the nature of value. So before you render a service, you must look at who is the consumer of the service. That's the first point of call. Do not create a product you do not envisage who the consumers are. And that's why you must ask, the first question is, who is being served? Who is the consumer of the service? That's what the stakeholder involved in the service delivery. So what does value this particular stakeholder to achieve their own objective? How does, for a major commercial bank, a microfinance bank, or a how do I put it now? A digital lending organization that want to lend 20,000, that want to lend 40,000, 50,000, 100,000, may not need an escrow credit, detailed credit report to make a decision. All right, but an access bank or a first bank that may want to do a 10 million, 20 million loan cannot come and use a nano report to make a decision on that particular loan. Does that make sense? Are we together?
Yeah, we are together, sir.
Okay, so each product is designed for a particular consumer. So as you are creating your product as a credit organization, as a lending organization, or a real estate, you must understand who the stakeholders are there is a market that is meant for the rich. That's one that's meant for the poor or for the middle or average person. The same way as you are consuming a report
Mr. Paulus, if you can hear us, we lost you.
Hello.
Mr. Paulus, we
Hello.
cannot hear you. Mr. Paulus.
I think the network went off.
Oh, wow.
Okay.
All right.
Let's reach out. Okay, he's back.
Sorry, I don't really know what's okay. Okay. Can you see my slide?
Yes, we can see.
Yes,
all right.
correct.
Can see us.
Yes.
All right. Thank you. So, fantastic. So then what is service offering? Because in all this, what is a service offering? A service offering is a description of one or more services designed to address the need of a target group. A service offering may include goods or access to a resources or variety of a service action. Let's take, for instance, a lending institution may want to recover, we want to make a choice on which of the may call credit bureau. I said, okay, credit bureau, you know what? FirstCentral Credit Bureau, I need your services. How? Say to verify my customers before I offer a loan. They give you a credit report or a platform that helps you to achieve that. Again, another customer can come and say, for me, what I want is credit bureau to help me to actually monitor my all the facilities I've given out. So they give you what helps you to achieve that. Another customer can come in and say, okay, what I need credit bureau to do for me is to help me to give me a batch report. And they give you. So each of these offerings is designed to address a particular need. If I am doing a KYC verification, what do I want to achieve? So you can do that. So if I am doing a loan verification of performance status of my customers, what do I want to achieve? If I am doing a performance portfolio monitoring, what is my intention of doing that? So that's why we say that each of the offerings of the credit bureau or each of the offerings that you have as a financial institution is designed to achieve a particular need for the target consumer group. So a service offering is execution of one or more services designed to address the need of a target consumer group. So as a digital learning organization, FirstCentral may target to say, okay, can you be using our API to consume your loan, to actually process this? They can ask other people and say, you know what, you can use this particular platform to update your record or data of people you have given loan that have paid up in your organization. So they offer you different services. The same way you offer people different services, like a financial institution, you have different services that is designed for different customer groups. So a service offering is education of one or more service designed to address the need of a target consumer group. So whether you are a big ticket loan giver or a small ticket loan giver, there's a product for you that FirstCentral have actually designed for you. Now let's bring that to again to other things like your in IT environment. If, for instance, I come to you and say, I need you to, how do I put it, provide me laptops, supply me laptops. That is one offering. You can come back again and say, I need you to provide me licenses or software licenses for my laptop. That's another offering. You can also come to me and say, I need you to provide me just support for my systems, like IT. I don't have an IT support. Now, you can have one of them, you can have all of them, you can have part of them, each of them combined. That's what we refer to as a service offering. So if I'm offering FirstCentral selling laptop to them, I am offering a service. If I'm coming back to provide an IT support, I am off. That's another service offering for them. Or if I am now selling laptop with licenses, it's another service offering. So if these are different, what we refer to as service offering, and this is based on the product you have as an organization. For instance, you come to Map Technology and say, okay, I need you to provide me training. I say, on what basis? Say ITIL. I said, okay, what do you need? Say, I just need only training. We can offer you a training on ITIL. You say, I need only examination. I can give you examination only. Or I need exam and training. So we give you that. That's what we refer to as a service offering. So I believe that is clear enough. Am I correct?
Yes.
Yes.
All right. So thank you. So it can be goods supplied to the consumer. It can be ownership is transferred in this regard to the consumer. Of course, the consumers take responsibility for future use. The example could be a mobile phone, or then the person receiver takes like access to a resource, could be another thing, like access to mobile service or a network, a customer, or sorry, a staff of yours from FirstCentral portal. So they log in and consume and download it, or real estate organization, you may want to check the status of the people who are owing you, who have not paid up. You can go to FirstCentral, they create an access to you to log in and check that. So it could be a service app.
I can't hear you again, no.
We can't hear you. We can't hear you.
We can't hear you again, no.
We can't hear you. It's like the network is not good.
No. The network.
Thank you.
Sir, we can't hear you, sir. Sir, we can't hear you, sir.
Don't worry now. If you come back, we don't need to complain.
It's just the network. He will be back now in a sec, please.
We'll be back.
Can you hear me?
Yes, we can hear you now, sir.
Yes, we can.
So sorry. All right. So sorry. Network went off again.
I have to repeat all you said earlier.
Yeah. All right. No problem at all. Let me see where I was.
Okay, sir.
All right. Okay. I gave instance like somebody may want to use FirstCentral may offer people a service offering for you to log in to their platform to consume their credit report in order to make a decision about a lending about your lending decision you want to make. So granting you that access to log into their platform is actually a service action that people can actually perform. They can get access to have FirstCentral reports. You can log in that as part of your service offering that they are giving to you, or they can give you an API to actually use in consuming the report from FirstCentral Credit Bureau as well. So again, you offer services based on the product that you have. Are we together?
Yes, we are with you.
We are with you. All right, thank you. All right, so again, let's look at the concept of value creation. First, what is value? Value is the perceived benefit, importance, or usefulness of something. Value is perceived benefit, usefulness, and importance of something. That's why we said the Nokia that Larry gave to Amina, what was the value to Amina? To Amina, of course, the value was actually very diminished compared because she believed she belonged to the Gen Z generation. All what she can do with that particular Nokia, all what she wants to do with phone, the Nokia cannot do it. So that means the value is low for her. But for a grandma in the village, the value was high because all what she wants to do to use the phone to make a call to reach the children in town, those things were actually there in the service. So she can actually feel it. So value is perceived benefit is perceived because it's relative. So what is valuable to Amina might not be valuable to grandma. What is valuable to grandma might not be valuable to Amina. So that's why we say it's perceived benefit, usefulness, and importance of something. Now, the purpose of every organization is actually to create value. Some of us open organizations just to make money. You make money when you create value, when you address a need. So the term value is a very heavy word in ITIL. From ITIL version 1 to version 4, value is the center of all what we do in ITIL. So that's why definition of ITIL, value should not be taken lightly. Now, value creation has to involve a balancing act, which involves the outcome, the cost, and risk. Well, what is outcome here? Outcome is intended results or objective you want to achieve by consuming a particular service. If I want to use FirstCentral Credit Bureau report, what result do I want to achieve? What result do I want to achieve? I want to be sure that, yes, if I see an unupdated record in FirstCentral report, I will not be happy. Why? Because it might lead me to make a wrong decision in offering a loan to somebody. So based on that, I want to see, from the time when Credit Bureau started, around 2009, when the Credit Bureau started, and the age where we are now, what is the difference with respect to non-performing loans we have in the country. If you look at that, notice that the figures have drastically dropped based on the fact that at first, people were giving loan based on assumption, not based on facts. But today, all the loans that you are giving now is based on facts. You can look at how people, if you are still suffering with non-performing loans that is so more high, of course, you may need to look at yourself or your processes, what you are doing. Am I really doing what I'm supposed to do? For instance, if you do not submit the credit report, the all granted credit facilities, and you wait until the loan goes bad, you now report it. Of course, a man that is on the ground fears no fall. So that you will struggle to recover the loan. But if you were reporting the loan at the point when it was given out, it makes it easier for you to recover your loan, because if I take 2 loans and one is reported and one is not reported, I will go on to go and pay the one that is reported fast before the one that was not reported. Am I correct? Hello? Are we together?
You are correct, sir.
Yeah. Yes. So that's what we mean. So the question is, what is the affected outcome? Before you started using credit bureau, what was the outcome you were having? The outcome you were having is that your marketers give out loan to people based on the kind of dress, the kind of car they drive, the way they look, they come in and they assess them, they give them loan based on that. That was the outcome you were having. Now, most of your loans were going bad. Some people borrowed your loan and go back to politics and they lose the election and they are not able to pay. Some people borrow your loan and pay back others. So at the end of the day, you have so many bad loans. That was the affected outcome. So that was the outcome that prompted the emergence of credit bureaus. And then that was why you signed up with FirstCentral Credit Bureau and say, you know what? I want to manage my risk by signing up with FirstCentral Credit Bureau. You sign up with them. Once you did that, the next question is, having signed up with FirstCentral Credit Bureau, what is now the supported outcome with respect to my volume of loans that are non-performing? Am I still having the same rate? Then if that is the truth, then there is no value here. So meaning that having paid FirstCentral Credit Bureau to conduct a credit search and having followed the prudential guidelines CBN has given to me to actually conduct my assessment as a lending organization, institution, or a credit facility, granting my credit facility. Now, what is the percentage of the non-performing loan as against when I am not using FirstCentral Credit Bureau? You know, say, oh, based on the time we started using FirstCentral Credit Bureau, we have reduced our non-performing loans to a single digit in percentage. So that means it's making progress. Then the question, so based on that, the value is delivered. Are you with me? Are we together?
We are with you.
Yes.
Thank you. Thank you. So value is delivered because the supported outcome is the outcome the result we are witnessing by virtue of consuming the credit report from FirstCentral Credit Bureau. So that is the supported outcome. So since the outcome is better than what it used to be, we can now say value is delivered. But if at the end of the day that there is no difference between them or it's still worse, then we can say there is no value delivered. That's number one point. The second point we need to consider in value creation is, what is the cost introduced or the cost removed? Cost is the resources that you have to invest in order to consume a resource. So when we say cost in this regard, it is 2 types. We have what is called cost introduced. Cost introduced is what is referred to as the amount of money or resource you invest in consuming the credit report from FirstCentral Credit Bureau. That is the cost introduced. What is the cost removed? Cost is removed is the value proposition. Is what you have to save. The non-performing loans you have to save. Your money, capital you're going to recover that time. The amount you would have been spending on litigations to go to take people to court to recover your money and thereabouts, which you are no longer spending, but by reporting, people are coming back to pay. That is the value proposition of FirstCentral Credit Bureau with respect to the service they are offering you, that is what we refer to as cost removed. So that amount you could have been spending if you have not engaged in the service of FirstCentral is referred to as cost removed. Are we together? Are we together?
We are with you. We are with you.
Thank you. So if the cost introduced, if the amount the financial institutions have to spend is higher than the benefit, the amount they could have been saved if they are to go to court and use force and recover their money. If that money that they are paying to FirstCentral Credit Bureau is higher than the amount they remove, then we say there's no value. But if the amount you are paying to FirstCentral is a peanut compared to the loan amount you are recovering, we now say value is delivered. That is on the aspect of cost. Then the number 3 is risk. What is risk exposure or risk introduced or risk removed? Of course, there is a risk because you are going to be sharing your data with FirstCentral Credit Bureau. It's a form of risk. However, can you compare that with the risk of not recovering your capital as an organization? Or can you compare that with the risk of not meeting up with CBN regulatory requirements, or the risk of not which other one? Which other risk do you have there? Which other risk do you have? Losing your capital. Yeah, losing your capital. At least one of the banks was closed down last year. So today, one of the reasons could be that, oh, the loan they gave out was higher than they couldn't recover most of the loans. If actually they recovered their loan, maybe they would have survived. So in that regard, can you compare the amount you are paying or the sharing the data, the risk involved in sharing the data in a controlled manner, okay, with FirstCentral Credit Bureau or any other credit bureau, and the amount you are going to, or the risk involved in revoking your license because you are no longer able to operate, you don't have the fund. So if the risk introduced is actually less than the risk removed, then value is added. So all these three are supposed to happen. However, there are some cases where only you may chase this particular value by only focusing on risk elements alone, especially when it involves regulatory requirements. Is that okay? Is that okay?
It's okay.
Thank you. Now, note value can be subjective, and therefore value is different according to each stakeholder that is involved in the value service consumption. Now, service providers and consumers. What is a consumer? Like if I ask you, are you a consumer or a provider of a service? Which one are you? Anybody here?
I'm a provider.
You are a provider, okay?
Provider of service.
I'm a provider of service.
Oh, fantastic. Of course, that is the normal answer we get. But in reality, no option exists as a provider.
But I'm a consumer to CRS, to FirstCentral.
Okay. So what we are saying,
I'm a consumer to FirstCentral.
Fantastic. Now, what we are saying is this. Each organization or each establishment provides and consumes services depending on the role you find yourself. So service providers can be external, service providers can be internal. It could be selling service on the open markets to the other businesses or to individual consumers. For instance, IT department is a provider of a service to the business within the same organization. And they must see them like that. They must see the business as being a customer, as being the users of their service, as being the consumer of their services. If you don't do that, then the value may be lost in transit because you might treat them without the necessary respect or regard that you deserve to give to them. And of course, company will suffer in that regard. So service providers can be part of an alliance. For instance, if I'm coming to deliver this course to you as an organization, in your organization, I am coming in as Map Technology, I am coming in as PeopleSat, I am coming in as Axelos. So I am carrying the whole three names together to deliver the course for you. And that's what we refer to as a service alliance. All right? So a provider So when we say a provider, you can be a provider when you are providing service and the next minute you are consuming service. Now, somebody say, I am a consumer of FirstCentral service. If, for instance, FirstCentral have an account with your organization, FirstCentral is also a consumer of your service. Do you agree with me?
Yeah, I agree with you, but that again, FirstCentral should need to urgently open an account with us. They don't have account with us at the moment, so they need to open that account.
Okay, thank you. That's your feedback is well noted. All right. So we take note of this to the management. Something has to be done about it. All right. So let's go.
Thank you very much.
Thank you. All right. So service consumer, who is a consumer? When you are receiving service, an organization takes on the role of a service consumer. When you are receiving service, you take on the role of a consumer. When you are providing service, you take on the role of a provider of a service. Like I mentioned before, somebody asked me, I said, you are jumping the gun. It is the service consumer is a generic role that is used to simply, in practice, more roles. Of course, in practice, more roles involve such as customers, your users, and sponsors. These are all roles that can be combined or seen inside the word consumer. Are we together? Are we together?
Yes.
Very well.
All right, thank you. Okay, now a clear understanding of who the consumers are in any given situation and who the other stakeholders are in an associated service relationship is very, very important. So these roles may have different expectations for value. Now, of course, value for provider for a user is different from value for a customer, is different from value for a sponsor. And as a provider of a service, you must understand this and make sure that you deliver the value to each of the stakeholders. Of course, that's why we have what we call power interest matrix. In power interest matrix, we're able to group stakeholders based on their influence, based on their power, and based on their interest in the service, and we're able to determine what value means to each and every one of them, and we're able to manage them effectively. All right. Now, these are the key stakeholders in organizations or in the chain of service delivery. Number one, you have who is an organization. Organization does not mean a registered entity like a CRC number with what do you call it, CSC number. No. Now, organization is a person. An organization is a person who has a function, who has responsibility, who has authority, who has objective, who has relationship to achieve the objective is called an organization. An organization is a group of people, a person or a group of people that has their own function with responsibility, with authority, with objectives, and relationship to achieve those objectives. It's called an organization. If you come inside FirstCentral, FirstCentral is an organization. The IT department of FirstCentral is also seen as an organization by service management. The business unit is an organization. So when you come in your credit unit is seen as an organization inside your organization. Are we together?
Yes.
Okay. So so long as you have a function, you have a responsibility, you have authority and objective and relationship to achieve those things, you are treated as an organization. So a person can become an organization. So take note of that. Now, who is a customer? I've defined that before. A customer is a person who defines the requirement for a service, who takes responsibility for the outcome of a service consumption. If I'm coming to do business with your organization, now I discuss with you and say, oh, you are offering MAP technology the opportunity to train your entire organization. Fine. Now, the person that I had the discussion with, like the human resource or the HR or the head of the academy, is the customer to MAP technology, not you. The person who I discuss with, the person who decides whether to do training alone or to do training and examination, who decides the vendor to use, is the person we refer to as the customer. Is that okay?
Please,
Come again. Can you come again?
Yes, sir. Okay.
All right. I said, if I'm offering a training to your organization, or FirstCentral is discussing with your organization right now to offer you services, and there's a meeting, back and forth meeting, discussion with the business unit of FirstCentral Credit Bureau until they agree on the kind of report you want to consume, the amount you want to pay, the medium you want to consume the report, and all those. That particular person that FirstCentral is having discussion with, who decide the kind of report, the amount to pay, the medium, is the customer to FirstCentral. Are you with me?
Are you saying
I
even
think it's
if
the
that person is
management.
working for an organization?
Yes. Yes.
You are talking with just one singular person. I mean, that
it
person
could be a
can
team,
respond to.
it could be a person, but that person within the whole auction is your. Don't get me wrong. Yes, we have a customer. FirstCentral, First Bank is their customer. We agree.
Okay.
But we don't want
Yes.
to see that the customer, in this regard, we are not seeing First Bank as being the customer, First Bank name now as the main customer. We want to see the person in First Bank who decides which report to consume. Are we together? Are we together?
We are with you. We are with you.
First Bank is a consumer of the service. First Bank is the consumer of this service. When we come to First Bank, we want to see who is the customer in First Bank, who are the sponsors in First Bank, who are the users in the First Bank with respect to this FirstCentral report they are consuming. So when we come there, we now look and say, okay, who in First Bank that the MD or any other person will deal with if the service is not going on well. So that person is the person that defines the requirement for the service. That is the customer. Are you with me?
Okay. Okay.
Yes, yes.
Thank you. Then the next question is, when you come in there, the next person there is who is a user. A user is a role in your examination. For those that maybe want to write the examination, you might not see a user as being a person, because we don't want to address the user as being the entity or that human being you know by name. Like, oh, this person is Jonah, is Joshua, is Abdullahi. No, we want to see the user as the role that uses the service, not the person. So in examination, you will see it as a role. So a user is a role that uses a service. Is that okay?
Sure.
We are with you.
Thank you. So a customer is a role that uses a role that defines requirements for the service consumption and takes responsibility for the outcome of service consumption. So the users, all the people who by virtue of the SLA you have signed or the contract agreement between FirstCentral and the organization like First Bank or Access or Union or any other bank that is involved there, that particular those people that the SLA have indicated that should be granted access, and so okay, create this person to have access to consume the credit report on that is referred to as a user. These are roles that uses the service. Is that okay?
We are with you.
Are we? Thank you. A sponsor is the person who authorizes budget for service consumption. So again, customer may say, all I want is escrow credit reports, detailed reports is what I want. And that's what I want. The sponsor will say, oh, sorry, what I can pay for is actually ordinary basic detailed reports. I don't want this one. The budget we have is this amount. This will come. So there will be a discussion until you agree on what works between the organization. So as FirstCentral Credit Bureau, the business unit, we have to look at who is the customer, who is the consumer, who is the user, who is the sponsor, and what does customer want, what does the users want, and what does the sponsors want. And your service must meet each of the need of these particular three people involved in that service consumer's role. Is that okay?
Very okay.
All right. All right. So, of course, besides this particular group of stakeholders who are the customer, the users, and the sponsor, there are other stakeholders involved within the chain of service delivery, including the government agencies, the government as well. So each of them has what value means for them. And as a provider of a service, you must understand what value means for each of these people. And note that the major stakeholder group you need to manage before every other person will have a value is the customer. So you must understand what value means for the customer. Of course, that's an examination question for those that want to write the examination. Of course, the major stakeholder group to be managed in order to deliver value for others is the customer. So, again, the key focus of a service management and that of ITIL is the way that auction co-create value with their customers or with their consumers through the service relationship. Of course, beyond the consumer and the provider that involved in the chain of the service delivery, there are other stakeholders which include service consumer. Who is a consumer and what value means to a consumer? A consumer wants to achieve outcome. A consumer wants to achieve benefit. A consumer wants to achieve the outcomes and benefits with optimized cost, risk, and resource utilization. That's very, very important. So when we say service consumer, a service consumer like a First Bank or an Access Bank want to make sure, or is any bank, so sorry, I may not call everybody name, but I just want to mention somebody so you don't think that it's AI that we are talking about. We're talking about physical entities here. All right. So if I'm dealing with First Bank, what does First Bank want from consuming credit report from FirstCentral? That achievement of that benefit and making sure that they pay the right price and making sure they optimize their risk. And again, the right price does not mean that it's a low price, because in this, we also like to let customers understand this. Now, at the point where you are drafting the service level agreement, we want to look at the volume of the report that you did, and we look at the corresponding amount you're supposed to pay. And when the capacity, when the demand for your service is increasing, you also need to understand that the FirstCentral need to improve on the capacity needed to service you to meet that level. So you also have to make sure you balance that up. So that's why we have to make sure that there is optimized cost. Optimized cost, and it does not mean low cost or lowest of risk or lowest of cost. No, we must make sure we optimize both the cost and the risk, and in delivering the expected benefit to the consumers. Then service providers. What is value for a provider of a service? A provider is interested in funding to establish or expand his business. He's interested in referrals. He's interested in this image development. He's interested in expanding his business. That's what provider wants to achieve. So again, this can only be achieved when the benefit has been delivered to the consumer. So if the consumer did not get benefit, of course, provider cannot have benefit. Do you agree with me?
Yes, we agree.
Yes. All right. So, as a lending institution, you must understand this aspect as well. As you're providing the fund to the people, you must give people the money in a rate that is also suitable for them to achieve their intention, so I can come to borrow again. So if again, anyhow you can support them, similar to what FirstCentral is doing right now, is to support the expansion of your business by building a culture of continual improvement within your organization. So with that culture of continual improvement, you can keep the momentum of expanding your business deliveries, and then you can come back to do more business with them. That's the essence of the course, the training they are doing. In creating the service ecosystem is to enable people to prosper, so you can also enhance the payment or how do I put the benefit that FirstCentral can also derive from you consuming their services. Then employee or the employees of a provider, what is the benefit for them? Most of the bank can declare we have made 1 trillion profit, 600 billion profit, we have made this amount of money. Now the employer or the employees, what is interested for them is a take home that we guarantee them that gets home to them with them. There's some take home that leaves you on the way. Am I correct?
Better explanation.
You're right, sir.
Yes. So some take homes may leave you on the way. So in that regard, if you are involved and your bank is declaring massive profit margin, you want to see that reflect in your take home and commissions and benefit and profit sharing and so on. That's benefit for you. So the financial or non-financial incentives, now is career and professional development. One of the things person is offering you today is a career development, which yes, everybody does program. Everybody does program. People come in, speak 20 minutes, 30 minutes, offer you this, but before you get what they are offering you today, this kind of training is a training that can change the culture and your thinking in doing business. You don't get that in 30 minutes talk. Are we together? So that's what they want to do to establish that they want to encourage you to build a culture that you can leave a lasting impression of the bureau in your mind. Anytime you remember FirstCentral and remember the quality of training that they've delivered for you at no cost. All right, so in that regard, say financial and non-financial incentives, career and professional development, sense of purpose, being among those that we were the set that achieved this, giving people a handshake for something that's achieving this, recognizing the people, effort of people within organization. These are the things that employees of the provider will want to be reckoned with. Again, society and community, employment, again, making sure that, yes, society and this engage value by employment, taxes are being paid. For instance, if you are working, before you earn your salary, they have deducted your tax. Am I correct?
Yes, you are right.
So meaning that you are valuable to the nation. But if, for instance, you do not have a job, there is nothing you are offering anywhere, you are not making any money, you are not working anywhere, it looks as if that you are the part of those that decreasing the per capita income of the nation. Am I correct?
Yes.
Yes. So based on that, you are not offering value to the nation as at that time. If you have nothing you offer to the nation, if you are not working, whether in your personal business or you are working somewhere, that means the country does not benefit anything from you. Rather, you deduct from the company, because by the time they add everybody to divide on the income of the country, you notice that you are bringing down the per capita income of the country. So society and community benefit, they contribute to the development of the community. Then charity organizations, financial and non-financial contributions from other organizations will also, these are part of what you get when you are profitable. Shareholders can reap benefits. They can reap dividend because you're delivering value. But if you are not offering, if you are making loss, in your service delivery, there's no way the benefit will be there. If FirstCentral cannot reap any benefit, if they are offering free services to all the financial institutions today and they are not making this, in few years they will not be in existence. And that's the reason. So when they come to us and say, oh, please, we need to review your price, is because they are asking you to keep us in business, to serve you for a longer time. Are we together? Are we together?
Yes. Yes, we are together.
All right. Okay. It is important that relationship with all the key stakeholders are understood and they are managed. So if you don't understand this relationship, you might be offering services that do not meet the expectations of your people, or the value is not being delivered. Now, service relationships. Now, what does it mean to have a relationship? Of course, before I can offer a value, there needs to be a handshake between the provider and the consumer. That handshake is what we refer to as service relationship. So service relationships are established between two or more organizations to co-create value. Now, the role of an organization, of a provider or a consumer, are not mutually exclusive. And organizations typically both provide and consume a number of services at any given time. So either you're providing or you're consuming service. Now, you can be providing service today, tomorrow you change and begin to consume from the same relationship. So that's what we refer to. That relationship, or all the actions that need to be performed by both provider and the consumer in order to consume or to create value, is what we refer to as service relationship. Now, what is the definition of relationship management? This relationship in service delivery need to be managed. Now, the service relationship management consists of the joint activities performed by a service provider and a service consumer to ensure there's a continual value co-creation based on what has been agreed and documented in your service offerings. Are we together? Are we together?
Yes.
Thank you. All right. Again, we also have then this is joint activity, but each of these persons has their role. What is the role of a provider? service provisioning. Service provision consists of the activities performed by a provider of a service. All right, this includes provision of access to a resource. FirstCentral can say, consume my report through mobile application, through web services, through API, through our portal, or any of these things. So before you consume, what do we need to do? We need to create your users to have access to that. So they have given you access, they have created your users, they have performed their own, so the platform is up. But if you decide not to conduct a search before you give out loan, you will still have the same problem. So then there's no value co-creation, but they have actually done service provisioning, but there's no service consumption. So this includes provision of access to resource, fulfillment of service actions, resource management, and service performance and continual improvement. These are what we do under service provisioning. And again, service consumption is the activity that is performed by the consumer, okay, by the service consumer to consume a service. Like I said, if they give you access to their portal and you decide not to conduct a search and give out a loan, there will be no value delivered there. But they have done service provisioning, but there was no service consumption. So this includes the management of the consumer's resources. It includes utilization of the provider's resources, requesting of service action, and as well acquiring of goods. Any questions so far? Any questions so far?
No. We're enjoying you, sir. Go ahead.
All right. All right. All right. Thank you. Now, what is the difference between an output and an outcome? Because having a proper understanding of this will help you to differentiate the services you render to know whether you are delivering output or you are delivering an outcome. Now, an output is a tangible or intangible deliverable of an activity. A good example, like I gave you, is a mobile application. Variety of almost all the financial institutions here today, you have a mobile application. Am I correct?
Yes.
Yeah.
Yes, right.
So, thank you. That mobile application, like we said, is an output. So the question is, we need to go back to go and check what is an outcome then. Outcome is a result for stakeholders enabled by one or more output. Outcome is what is documented in the business case that you created at the point of seeking approval to create that mobile application. People do not give you approval to build a mobile app because of output, but because of the outcome you have indicated you want to achieve there. That's what we refer to as the outcome. Outcomes can be delivered through a combination of an output. So if, for instance, we have delivered a mobile application, but there is no publicity on that, there is no advertisement of that particular mobile application, you may end up not achieving the intended outcome. So that's why there are other things that are involved. You must consider all aspects of your services that will contribute to enabling the delivery of the value with respect to the consumption of your IT services. So again, outcome is a result for a stakeholder enabled by one or more output. Now, service providers should help their customers or their consumers to achieve outcomes, not output. In most cases, it might be difficult for a provider to fully have a proper understanding of the intended outcome that the consumer wants to achieve. And that's the reason why we refer to a value co-creation activity, where we need to interact with the users, interact with the customers, interact with the business unit to understand what they want to achieve, so that we can make an advice, contribute to them in the way we feel that we'll be able to deliver, and allow them to agree. So that's why we use the term value co-creation. Value co-creation simply means developer cannot wake up and create an application and dump on business to use, assuming that you understand the need of the business. No, the business is the person that will say what the requirements are. So when you come to them, tell them what is your need. Then a business analyst, a BA will now analyze the requirement and confirm or convert those requirements, those needs, into a requirement which will now be delivered. Of course, in the current age and season we are in, instead of having a just BA, we have what we call a CBA, Continued Business Analyst. CBA is what we have. If you must thrive in a high velocity IT environment, that's what we use right now. So again, we are saying that in case they are around, should help business to achieve outcomes, should help them to facilitate outcomes. And that's the reason that the IT is to support achieve. The reason we cannot have an IT strategy if there is no business strategy. So they say, oh, my IT strategy is ready, I'm waiting for business. There's nothing like that, because you are only going to facilitate or support the achievement of their business objectives. That is the term. So, and that's the reason why we say in the current season, we used to have what we refer to, how do I put it now? Formally, what we have is a situation whereby we see that the IT leaders was actually, how do I put it? IT executives that understand business. Yeah. We call them, we say those people are the industry leaders are IT executives that understand business. But today, that has changed. The industry leaders are business executives that understand technology. Did you get me?
Please come again.
Are we together? The industry leaders are business executives that understand technology. It is no longer technology executives that understand business. That language has been reversed. So what we have today is the real industry leaders are business executives who understands technology. Are we together?
Okay.
So if you are a credit person, if you are a risk person seated here, it is your responsibility to have a proper understanding of how to leverage technology to achieve your mission, your vision, your objectives. That is what makes you a leader. It is your strategy that the IT will support. So whatever thing IT wants to do is to support achievement of your objective as a business leader, not the other way around. Are we together?
Yes.
All right. So again, service providers should help. I repeat, they should help their consumers to achieve outcomes. It can be difficult for providers to fully have a proper understanding of outcomes that consumers want to achieve. Now, some providers may even predict. They may predict or even create demand for certain outcomes, forming a target group for their services. Yeah, it is allowed, but whatever you're doing, you must align with what the consumer wants to achieve or what the business unit wants to achieve. Now, there are basically two types of costs to have to understand here, which you need to evaluate. What is cost in the first instance? Cost is amount of money or resource that is spent in order to consume a service. So the amount of money spent on a specific activity or a resource you spent is what we refer to as cost. And I've explained this before, that for the service consumer perspective, there are two types of costs that they must consider. The first cost is cost removed. Cost removed by the consumer, from the consumer by the service, which is referred to as a value proposition. What cost are we going to be saving a Fidelity Bank, or what cost are we going to saving a Unity Bank or a Keystone Bank if they consume FirstCentral credit reports? If they should use FirstCentral credit reports and decide on the loan to give, make a decision and give out the loan, if a UBA should use that to make a choice to give out a loan, and they report to the people, what cost have we saved ourselves? If we go back over the years before 2009 and check the bad loans we have and compare it with the bad loans we have since after 2009, for those that are following the prudential guidelines of the Central Bank of Nigeria, Then you now compare the amount you have paid credit bureau again in consuming the report to check if you are making profit or not. And you can agree with me that the bank will be in a very good position if they do that analysis. Am I correct? Are we together?
Correct. We are together.
Yes. Now, that is what we refer to as, thank you. When FirstCentral is coming to you, that is what FirstCentral will represent to you as a value proposition. That this is what you stand to gain. And once you do that, you say, oh, truly, the amount I'm paying the bureau is actually a peanut compared to the benefits I am getting. So based on that, you can say, yes, that value has been added. Now, another cost you need to consider, like I've analyzed both of them together, is the cost introduced or cost imposed. The cost imposed or the cost introduced on the consumer by this service provided by FirstCentral Credit Bureau in this regard is actually the amount you are paying for you to integrate to the services of FirstCentral from the point you sign up to the point you use the service on a daily basis, and again to maintain your data and records. So that amount you pay to them is cost introduced, which we say that if you look at that analysis, notice that for you, you are actually getting a good value based on what you are paying. So the cost introduced or cost imposed on the consumer by the service is the cost of service consumption. Some consumers describe this as what they have to invest in order to consume the service. All right. All right. Now, let's look at another another component of risk management. I've looked at another component of value again. I've talked about the first component is outcomes, and we have established that outcomes, the supported outcome should be better than affected outcome. Affected outcome was the outcome you had prior to when you started consuming the FirstCentral services. That was what we refer to as your affected outcome. Then the supported outcome is your outcome, your result you are getting now since you started consuming the services of FirstCentral in delivering your loan services. Then cost introduced is the cost amount you are paying FirstCentral for you to consume the report, and then cost removed is the amount you have removed from going to court or going to other litigations to actually chase or paying some people to go and chase your funds that are there. All right, so that amount is another thing that you have been able to, that's what is referred as cost removed. Then coming to the concept of risk, which is the third component to consider in when we're talking about value creation. What is risk? Risk is actually an uncertainty of achievement of your outcome, is what we refer to as a risk. Of course, risk is a possible event that could cause harm or loss or make it more difficult for you to achieve your intended objectives or outcomes. Now, in this regard, what is the risk involved in this place? What is the risk involved? Risk of your risk as an organization, your number one risk as an organization is the risk of not achieving your objective or purpose as an organization. That's the primary risk of every organization. So whether you are recruiting a staff or you are sacking staff, a part of risk management to meet the objective of the organization. Are we together?
Yes, yes.
We are with you.
So the primary risk of every organization is the risk of not meeting their purpose or objective as an organization. Okay, so from this point, if you are giving out a facility, the most important thing for you when you are giving a facility is to recover your capital. Am I correct?
Yes.
So if you give out a loan and the capital did not come, you won't even know about interest. Interest comes second. The most important thing is to ensure that your investors' funds is secured. That's your primary risk, and that's why you do all the risk analysis or risk assessment. The risk assessment that FirstCentral has provided you a platform to do in order to have a safe lending. Because this issue, for instance, we encourage financial institutions. When we see microfinance banks still go down or some banks still go down, the question is it that we are not following this in all? Are you saying that these things are not working? Yeah, I know that last year we had a program at CBN where we were, at least I was opportune to facilitate for most of the financial institutions that was there in preparation for the audit last year. And one of the things that I said during that meeting, when we had that in a CBN, was that if all financial institutions should adopt the guideline provided by CBN, then the bank should be stable. That's the truth. If I must conduct a credit search before giving a facility and make a choice, based on what I see as the figures, the facts I see on the credit report as reported in the credit bureau's record. And I am making a choice also to make sure I report those loans I've given out immediately to all the credit bureaus. There is no way over 80% of my funds will not return back. That's the truth. But if I wait until the loan goes bad, before I now start reporting back to the credit bureaus, then already the loan is bad. It becomes difficult to recover. That's the truth of the matter. So if we do that, we will sanitize the lending ecosystem so that we can actually do business. For a manufacturing company that does not have fund for raw material can get a raw material and process on credit and do business. Consumers pay, and you pay by the chain continue in such a way that every single loan that you give out to a to a sector of the economy should cascade around the whole of that sector. It shouldn't be only the person that borrowed the loan. So if I'm a manufacturing company and I've taken a loan because I have the capacity to borrow a loan, I'm able to take a loan. Hello?
Can I ask a question, sir? Good afternoon, sir.
Go ahead.
All right. You were saying I've been on this training for a period of time now, and you have repeated one consign like twice now. You said that loan peradventure that was not reported at the point of probably giving it out. If you now bad, if later we decide to now report it, I don't know.
Yes.
That the credit bureau will not accept it, or what are the
fantastic?
I just want to know.
Thank you. I understand you. Now the question is, if someone is sick and stay at home, and the sickness has eaten deep into the body of the person, and they carry the person to the hospital, will the doctor not treat the person?
Yes.
The doctor will treat. The doctor will get injection. They will do everything. And it now depends on how long it will take the person to recover.
Very well.
Is your question answered?
Very well. Very well.
Okay.
Meaning at this junction, there's still room for us to report those loans that are bad already.
If there is need to report it, get what I'm saying. Okay. It is your. In fact, you are not reporting loan to the credit bureau is actually creating a problem in the lending ecosystem.
Okay, sir. Additional question. I'm kind of new to this credit bureau now, right? And is it that at every point in time, whenever we want to disburse, that is when we should, that's when we should report to credit bureau as we are disbursing it, or I don't really know how it runs or something.
Thank you. Now, the moment you conduct a credit search and you have accepted to give a loan to Mr. A, as soon as you give that loan out immediately, you are supposed to report that loan back to the credit bureau that we have conducted a credit, we have given out 200 loans this month. So at the end of this month, we are in October, right? By end of October, like first day in the month of November, thereabout, I should be able to check my first, second day. I should be able to check all the loans I have given out in October and fetch them out and report to the credit bureaus to update in their record. Is that okay?
Hello, sir.
Yes.
Hello, sir.
Yes, please.
Okay, so this is Stanley Zabayo from Point One Microfinance Bank. Thank you for your presentation thus far. My challenge over the years have always been that, okay, we have between 1st to 5th of every new month to submit the report of the previous month.
As stated by Central Bank of Nigeria, yes?
Yes, sir. Now, the challenge is this. You keep checking when you want to spool for a person's profile. And sometimes you know that this person has taken loan from XY Microfinance Bank, and the reports are not there. The reports are there. So why is that?
Thank you. Now, if you have such challenge, incidentally, FirstCentral has improved a lot over this period in terms of data management. The essence of this now is to give you that opportunity to liaise with them with the different platforms they have in place, which you can now use to report those data, and you will see them in the platform. Even if they were not there before, they are there. So the same way other credit bureaus are improving by the day. Now, most times, some of those things happen. Sometimes you may think you've reported. Some of them maybe that some info from fields might not be there. Maybe it was not recorded or something like that, which they will take you on that on a separate journey. They have a team, dedicated data team that can handle that for you. Now, they will make sure that they guide you. If you reach out to them, even after this class now, every of your records that are not updated, they will give you platform, or you can update that and make sure that you have an up-to-date record in your platform. Are we together?
Hello.
Yes.
Hello, sir.
Yes.
This is Ifeoluwa from Axiom Microfinance Bank.
Thank you.
This is Ifeoluwa from Axiom Microfinance. I think the question the other person was trying to ask is that, according to CBN, we must upload our credit. We must report the performance on our credits before on the 5th of every month. Now, I think what he's saying is that, how long does it take for FirstCentral to upload this report so that we can see?
Thank you so much.
Sometimes we upload, and so maybe a customer has finished to complete his cycle. Then the customer will still say FirstCentral is still reporting that I'm still owing, while we have uploaded that this customer is done with the loan. So the
I
question
understand
is,
you. I understand you
how
perfectly.
long will it take for them to upload it?
Thank you. Now, the question is, in reducing the how long, is the reason FirstCentral have created a lot of platforms now that can help you, that it can go on even within hours or within few days after uploading, which they are going to explain that to you in a separate meeting now to tell you, because there is enhancement they have made that can guarantee you that your data can go live even the same day as you are reporting them now. So such arrangement is already in place for them to take this. I think Madam Mary want to say something in this regard.
Mr. Apollo, thank you very much. You are really, really doing justice to this topic. And thanks a lot to all participants. It's been very, very engaging, and I'm enjoying myself. So regarding to the question, how long will it take? It's a matter of, hello, can you hear me? It's a matter of first come, first serve. So for instance, the Bureau received data from over 3,000 subscribers. So the first institution that says data is being treated first. So you might not, you can be sending data. For instance, people send data 10th day of the working, 10th day of the month, 15th day of the month, and you expect your data to go live immediately. There have been people that their data has come in first. Then what Mr. Apollos is also trying to tell us is that we have developed different platforms to help manage data effectively. One is the FCB cloud service, where you go upload your data is picked up for processing immediately. Another one is the FCB loader, automated loader, is a new one. After this celebration, this event, we're going to share the link to all our customers. So it is a do-it-yourself process where the user sign up for the service. Is web-based. User sign up and watch your data process right before your eyes and send you the analysis report, the rejected report. For the update part of it, where you want to update your information and see your information go live immediately. That's for single updates. We have also what we call iRemedy platform. It uses maker checker approach to secure the entire process, where authorizer updates the record and a superior person approve the record, and it goes on live immediately. Even those that want to use API, we also have API platform that enables data management, whether at the monthly data submission or daily updates. So these are processes we have put in place to ensure that data management is done at ease, at your convenience. Either you're coming to us or you want to do it yourself. We have platform that will enable you to do that. So after this event, we're going to share the necessary platform so that whichever one that is convenient for you, you can make use of it in updating your record. I don't know if I've answered your question.
Wow, I think
you have answered it. You have answered
Thank
it.
you.
All right,
Thank you so much. But I also have a question from here.
Go ahead.
All right, please. My name is Bamidele. I'm calling from Shalom Microfinance Bank, and it's a great opportunity for me to be here again. But my question is on the API. I make a request for API since yesterday, and do a mail, and up till now, nothing has, I'm yet to get a response and all of that. And I think one of my colleagues also make one request to concerning report, because I believe that every report we are supposed to send it out before 5th of every month. That's according to CBN rules and regulation. But we have a customer, about 4 or 5 customers who on a monthly basis, even after when the customers have even finished collecting loans, and going back to even check, we still notice that this customer is still on watch list. And a mail, we've sent this report on a monthly basis, and up till now, it has not been updated. Please, is there anything we can do about this? Thank you.
Okay, thank you so much, Shalom MFB. Let me start from the first question. My apologies. You said you mailed us yesterday to get API. So I want to, is it for report generation or for data submission that you are looking for? The API you're asking for? Is it for report generation or data submission?
It's for report generation.
Okay.
I have
My
a
apologies.
new, okay.
You will be
I have a
attended
new,
to.
okay.
Because of this event, a lot of us are very, very busy, especially the team that's supposed to attend to it. The rest assured us, even as we are talking now, someone is looking out for your email. As long as the mail came in, we will definitely respond to you immediately. Then coming to the customer that you said that every month, every time is still showing watch list, I will advise you check your data. Although the person in charge of the institution will reach out to you to check your raw data. There are fields, the bureau, not just FirstCentral Global Credit, we do not change any fields. It's whatever you report that the system gives back to you. There are other analysis done to make sure that you can get value from the report to make informed decision. So, but there are also, it's possible there is a particular field, we call it days in arrears, and we also have another field called loan classification. If these 2 major fields are not reported accurately, it will keep showing that the customer is either a high risk, either the customer is a low risk, is a watch list. So, but after this meeting, someone will go through your data with you to spot where the challenge is from. But be rest assured that it will be addressed. But it's a data challenge from what you're saying. It's actually a data challenge. It's possible to know if that field was reported accurately. But if it is from us, we'll also inform you and correct it immediately. I hope you're okay, sir.
To ask a question.
Okay. Please, we have to, but please, let me, hold on, please. You're going to ask a question, but let's also be mindful that we have limited hours to be here. Most of your challenges, you can drop them on the chats. We'll take it off from there. Yeah, but if it's respect to this, you can say, ordinarily we allow question, but the volume of people, number of people we have here, if we take everybody question, don't be surprised that we may not close today, but that's also allowed. So take the last person that said, just go ahead and ask your question so we can proceed.
Okay. Mine is that I have a friend that applied for a loan. He got his loan. I think that was last year. Then he paid back. Though he's been out of the country. So he always send me a message that these people in his loan, that he say after a month, he said that he's still owing how do I call it? Maybe it's a token of 4,500 naira. Or like, why will you owe if you have paid, if you can pay a loan of 50 or 100,000?
Okay, see. Get across to the person that gave him the loan, so we can move on. It's not just get across the person that gave him the loan. They've updated.
So what you do? Okay, see. Hello. You know what you do? These are specific cases. Now, in specific cases, we allow you to reach out to your account manager after today. He will address it based on this. But if it's a generic things, we would like to limit to the generic training to more of generic things, and so I will do not. I think what's the population I have here? I have over 300 or thereabouts here. Am I correct?
Yes. Yes.
Yes.
Okay. So if I allow us to do it like this, we might not be able to progress a bit. So please, I understand every concern you have. The essence of this is to create a culture of continual improvement. So what we are trying to say is for you to improve on this by making sure you reach out to the account manager in charge or relationship manager in charge of this thing. Then this will be addressed immediately. Trust me. Part of the team, what we are doing here now is also the FirstCentral team is also here. They're also learning a way of improving the services. So as we are improving ourselves, we are also expected to improve. So it is when both of us improve in the service, we create an ecosystem of service management that help us to achieve that expected value. Are we together?
Yes, we are together. You are together, sir.
Are we? Okay. Timisi, do you still want to say something, Victory? Or shall we continue?
Good afternoon. Good afternoon, sir.
Okay. Good afternoon. Good afternoon.
Yeah, thank you for the audience you give to me. My name is Timileyin from Greenbond Finance. The only challenges we are facing for some while is that we upload the report, and when we upload customers' report, by the point of doing credit search, hold on, sir. At the point of doing credit search, I'm not talking about
that's still what I said. Reach out now for this. Okay, go ahead.
What I mean is this. The issue is not. Hello, can you hear me, sir?
Yes, I can hear you now.
All right. The issue is that when we uploaded our reports, if other bank wanted to do a credit search, the report that we uploaded, they will not see the customer that have collected facility from us from their own search. It has been a confuse because it was really confusing. I don't know what actually happened. If we do credit search from our
you,
yes, we see other bank that they are reporting and other things. We definitely get it there. But from our whole end, if you do, if other bank do research, they will not see the customer that have took facility from us from their own report.
That's fine. Okay, fine. What I will do is send us a mail on this. This will be investigated and we will be advised so that we can continue.
Also attach the data, your last submission, so we use it to investigate, because it's a bit strange that you are submitting data and it's not reflecting on the report. It could be that the mandatory fields, there are mandatory fields that you must provide in the data for the data to go through into the database. So if those fields are missing, definitely they will all be rejected records. Even at that, there is also a notification where we'll send people feedback on the status of the last data they remitted to us. But like Mr. Paulo said, please feel free to reach out to us. That same email where you drop your data, or you have us, you have our contact, you can always reach us. The essence of this meeting is for us to collaborate, reason together, and I'm happy that you are participating, voicing your concerns so that we can reason together and resolve it. I've listened so far to all that have been said. They are actually communication things that we need to sit down to look at it and resolve immediately. They are not actually big issues that is out of place that we can handle. From all that I've heard concerning data, credit report, and the likes of it. So thank you.
I have a question,
please reach out to us.
Okay.
Please, ma, can we?
No, sorry, no, this is a general question.
Okay, Madam Mary, allow her. Let her go ahead.
Okay, sir.
Go ahead.
Good morning, sir, or good afternoon.
Good morning.
So my name is Ruth Olateju from Grooming Center. So my question is this:
from where?
Grooming Center.
Okay.
So for those that are submitting their reports via the API, now my question is this:
Can you hear me? Can somebody hear me?
I can't hear anything. Hey, yeah.
Okay, I think
can you hear me now?
Yes.
Okay, you are back. Okay. Thank you.
Okay, thank you.
Perfectly. The person has a question. We can hear her again.
Okay. So I said, can you hear me, sir?
Yes, please. Please note before you continue. Hold on. She's the last person that's answering question. After which we continue the class, please. So we can have another opportunity to start asking questions again as we progress, because we are going to do something like call practices. This is will come back again, so we'll talk about it there. So go ahead.
So my question is this: for those institutions that submit their data via the API,
yes,
does it update the credit bureau automatically, right? Or does the FirstCentral still have a part to play to update that information on the credit bureau, despite the API channel?
Okay.
API is a direct handshake with the database. There's less human intervention when it comes to API.
Okay, but there's
so the API is direct. Yes, it's direct.
Okay, no intervention at all. Then it goes direct.
It might be minimal. Let's not in API when we say AI or machine learning or robotic process automations. What we try to have is minimal human intervention. So we cannot rule out completely total human, because something can happen that may need people to intervene. But we have minimal. The language that we use minimal human intervention.
Yes,
is
sir.
that okay?
Absolutely correct, sir.
All right. All right. So let's progress. Okay, so we've been able to establish the importance of us managing the risk. When we say risk involved, we have to look at risk introduced against risk removed. So long as we notice that the risk introduced is actually less than the risk removed, then value is created. So it's at this point that when we say that supported outcome, Oma, are you still raising hand? I thought we said we'll take that later. Please. Hello? I think I can continue. You can bring down the hand so it won't pay you, so the hand will not start paying you. All right. Okay. So again, when we say risk removed, we have explained that using this. Of course, this has exposed a lot of things, which is also good, which is the essence of this is for enhancement and for improvement. So it has exposed a lot of things that we can do. So risk removed talks about the risk that is taken out from us by virtue of that service consumption, which is also part of value proposition. So we have aspect of value proposition from cost and also from risk. So risk remove is part of our value proposition, and cost remove is also part of our value proposition. So we need a balancing act, of course, in this to make sure that both the affected outcomes versus supported outcomes, that supported outcomes outweighs affected outcomes, the risk removed is actually higher than the risk introduced, and the cost removed is higher than cost introduced. That is when value will actually be delivered. Is that okay? Are we true now?
I'm with you, sir.
I'm with you, sir.
Yeah,
thank you. Now, let's bring us to the concept. Another aspect of value is value can be delivered in form of utility or warranty. Now, what is utility of a service and what is warranty of a service? Utility talks about functionalities that is offered by a service. Functionalities offered by a service. If you want to buy a phone, for instance, like Amina said that she wasn't happy with the Nokia 3310. So what do you expect from a phone that Dami want to buy for you as an Amina? What are the functionalities Amina was expecting from there? Are we together?
Yes.
What are the functionalities that you want to see in a phone that will meet her expectation? Of course. Eh?
Yeah, can I talk?
Go ahead. Who is that?
Yeah, this is Allow Ismail from NASCON.
Okay.
Yeah, you have to look at the memory of the battery capacity.
Okay.
The front and the brand will determine which of it that is I will go for.
Okay, let's look at when we say functionality first. What are functionalities of a service or a phone? What are the things you can see as a phone that you refer to as functionalities of a phone?
That's what are the things that the phone can be able to do. Which
processor.
Okay.
Exactly.
Okay.
Make calls.
Make calls.
Capacity.
One.
Capacity.
And receive. And receive.
Call of information.
Can receive
Capacity.
call. What else? Can he snap? Can he scan? Are we together?
Yes.
Now, this is capacity, is not a functionality. Are we together?
Yes, sir.
Yes. So when we say memory now is, can it save is number one. But when you're not talking about memory sizes, you're no longer talking about functionality now. So the first thing is you consider is utility of a service. Utility means the functionalities offered by a product or a service to meet a particular need. That's what we refer to as utility of a service. If this person says he's a man, what makes him a man? What can we see and call this person a man? Are we together?
Yes.
That's what we talk about. That is what we refer to as utility. So in your service delivery, what can your service do? Now, FirstCentral have talked about that they have a mobile application. The question is, what can I do with FirstCentral mobile application? If I open it, what are the things I can see I can do there? Can I check my score? Probably yes. Can I request for my reports? Yes. Can I what else? Take a loan through the app? Can I see what are the things can I update my record from there? So every single thing you can do at that point is what we refer to as the functionalities offered by the service. Is that okay?
Yes.
So functionalities offered by a product or a service to meet a particular need is referred to as utility. It is used to express whether a service is fit for purpose. Does it fit the purpose I'm buying it for? Yes, if I say I need a phone to call, I need a phone to snap, I need a phone to do TikTok, to do any of these things, WhatsApp and so on. Yes, I can bring an iPhone and give you. I can bring an Android and give you. I can bring a China phone, one Chinko that have like 3 SIM cards, 4 SIM cards and give you. All of them have utility. Am I correct?
Yes.
Are we together?
Yes, we are.
So utility can be summarized as what the service does. Your mobile banking application, mobile app, what can I do with it? Can I check my balance? Yes. Can I transfer from there? Yes. Can I pay for bill there? Yes. Can I pay for my Uber? Yes. Can I do this? Yes. So all those things that I say, okay, can I obtain loan there? I say yes. So all the things that you can do there. Those things is what we refer. Oh, if I have made a wrong transfer, enter somebody's account, can I reverse it? Are we together?
We are listening.
Yes. So if I cannot reverse it, that means, oh, it doesn't have that functionality. So it means something is fit for purpose. I am buying it. So if I'm buying a phone to keep for my kids at home, that just to make call alone, Nokia 3310 can do it. I can buy that and keep. So it's fit for purpose. I am buying it for. So to have utility, a service must either support the performance of the users or consumers, or should be able to alleviate the pain point or the constraint of the consumers. So your service should be able to do at least one, or in most cases should do both. If you cannot do it, then you are not offering a service. If I'm having a challenge, what is the challenge I'm having? The challenge I'm having is that I want to assess, I want to manage my risk when I'm giving loan. And your service cannot help me to manage the risk, then it's of no use for me to use it. But if it can, yes, okay, it has it. So that it offers those functionalities means it has utility. Now, when we now say to what extent can those functionalities exist? You might have a phone that has a good camera. It can scan, it can do all these things. But once it falls on the ground once, that's the end of it. We can say there is no assurance. So warranty talks about assurance that a product or a service will meet agreed requirement. That's what requirement service warranty is all about. So warranty is talking about whether the service is fit for you. Are you with me? Are we together?
Yes, we are together.
Thank you. Thank you. Well done. Now, often there's when we say capacity of a service, when we talk about availability of a service, when we talk about security of a service, when we talk about continual level of service performance, we are not talking about warranty, not utility. So utility is there, is it there? Yes, but you go there to perform action, it does it sometimes and stop. So there's no continuity of delivery at that level. We can say that that service does not have a warranty. So you might have warranty but no utility. But for you to deliver service acceptable, then it should have both utility and warranty. Is that okay? Are we together?
Yes.
Yes, sir.
Yes.
Thank you. All right. So can someone answer this question? What's the answer?
Sorry, we can't hear your question.
Are you not seeing my slide?
Okay.
A service is identify the missing words in the following sentence. A service is a means of enabling value co-creation by facilitating dash. Outcome. Thank you. Outcomes.
Outcome.
All right. Okay. Thank you. All right. Which is the definition of a warranty? What is the definition of a warranty?
Warranty, that is B. The answer is B.
Okay, assurance that a product or service will meet agreed requirements. That's correct. That is correct. Okay, what is A? Option A is what?
Tangible, intangible elements that produced by carrying. That is utility.
Option A is utility.
Is what?
Utility.
Utility.
No, A. What is A?
Output, sir.
A is an output. A tangible or intangible of a product or service is called an output. Okay. What is C?
Risk.
Risk is risk, correct. What is D? Utility. Thank you. All right, thank you.
That's utility.
All right, thank you.
What is the package?
All right. A service provider describes a package that includes laptop with software license and support. What is this package an example of?
Service offering. Service offering.
Thank you. What are the two types? What are the two types of? Why is this showing? Okay. The two types of costs that a service consumer should evaluate.
Cost removed and cost.
The cost removed by the service and the cost imposed by the service.
Cost introduced
So
and cost removed.
Cost introduced and cost removed.
And cost removed.
Okay.
B.
All right. Thank you. Okay. All right. So again, that took us to the end of that first one. We need to move to dimension of service management. All right. Now, can we continue or you need a break?
No, let's continue.
We need a break.
Want to eat breakfast too?
Please, a break, sir.
We need a break.
Okay. Okay. So let's take. Okay. Okay. How many minutes break do we want to go?
What? 30 minutes.
Just 10 minutes.
30 minutes.
Let's do it.
15 minutes.
Okay, let's do a 10 minutes break.
No, let's make it 15
minutes. Let's do 15 minutes.
15.
15 minutes break, yes.
We can go on break.
All right, thank you.
When do we come back? Now, when do we come back?
When are we coming back?
Okay. What's the time?
That should be 12:45.
Yeah, okay. So let's 15 minutes, that's 12:45.
12:45.
Thank you.
Yeah.
All right.
Sir, can we ask questions while we are on break? Can we ask questions?
Okay, ask.
You are on break, please.
Yeah, people are on break. No break.
Say no. Say no. So when we come back,
Oh, fine.
Yeah.
When we come back.
All right.
Yeah, so how we come back?
Please, how long will the break last?
Till 12:45.
No, I'm complimenting. When you don't pay more, we can lay you that. When I'm good, let's say
What time are we coming back?
Debit or credit.
Kindly mute yourself, so.
Kindly mute, please.
Please, what time are we coming back?
12:45.
12:45.
Thank you.
Quel est qui Jen?
Sorry, please, can you see my screen?
Yes.
Yes, we can see it.
All right, thank you. So, I think we have to start immediately.
Okay, let's continue.
Okay. All right, so welcome back. Let's move on straight. Now let's look at what we refer to as the dimensions of service management. Dimensions here simply talks about organization's resources, which is grouped into two. We have what is called the tangible and intangible resources of the organization. So there are four of them. The four dimensions was formerly referred to as the 4 Ps of service management. Now, these 4 dimensions we are talking about are grouped into tangible and intangible. The organization and people, information and technology, and partners and suppliers are referred to as the tangible resources of the organization, while the value streams and process dimension is what we call the intangible resources of the organization. So for you to deliver a service, you must ensure that the 4 dimensions of your service management is actually assessed, is evaluated, is ready. That's the only way you can deliver an acceptable service. So the 4 dimension talks about the internal resources of the organization. Now, before we now look at the external factors that could actually affect or influence your delivery of that particular service. Are we together?
We are with you.
Thank you. All right. Okay, so let's go. So in the previous version of ITIL, it was called the 4 Ps of service management, which means the people, the products, the partners, and the processes. But in version 4, we now call it the 4 dimensions of service management. Now, which is organization and people. In organization and people, what are we looking at? We're looking at the culture of the organization, the roles and responsibility, the skill set of the people, the organogram of the organization that is used in delivering that particular service. We want to consider those things. The flow of information, the communication within that organization. How are people able to send information? What culture do they permit? For instance, if you're in a corporate organization, what culture do you do today? Or if you're in a government organization, let's say you are an organization like where everybody within the organization, you must call people by their post or by their director or this. You have to abide by that culture. You come to an organization who everybody can be referred to as by their names, first names. Most of the corporate organizations today, that's what you see. You call them by their first names. Now, when the person has sent a certain level, you can still call them by their initials. So based on that, what culture do you have? Does your culture support the achievement of your objectives? So those are the things we look at and under the organization and people. What skill set of the people that you have? Are they knowledgeable to deliver? What kind of people do you have in that place? What is the attitude of the people? What is the attitude of the people? Okay. Now, what is the competent level of the people? So, but when we now look at technology and other information technology, which is also called product, what platform are they using in delivering the services? This company, is it based on Java platform? Is it based on .NET platform? Or is it based on Oracle platform? Is it based on Microsoft? So what kind of platform, what technology are we using? Is it an API platform we are using or so? So we want to understand the information technology dimension, considering the aspects of the tools or the technology you use in delivering the service. Then we look at, again, the next important dimension we also consider is the partners and suppliers. Who are the partners? Who are the suppliers? Locally or internationally, what partners do they have? What arrangements? How do they manage the partners and suppliers they need in order to deliver the services? Is there coordination between the organization and their partners and the suppliers? So are they properly being managed? Is the organization taking responsibility for outsourced services of the organization? So because what we outsource is responsibility, not accountability. So we want to look at those things under partners and suppliers. Then under value systems and services, value systems and process dimension, we look at what is the workflow that you use in delivering the services? What is the coordination of the activities? What are the policies that we use? What are the processes? What are the procedures? Of course, we have 3 layers in governance that we look. We look at the strategic what do you call it again? Yeah, strategic. The people that talk about the policies of the organization that make the policies. This strategic organization. We look at the steering group, or the people that are called the middle layers, where the processes are being created. I will now come to the lower layer or operational group that reports to the steering group. We now talk about procedures. We talk about methods or structural approach of doing work. So these are the things we consider under value systems and process dimension. Then, if those things you have considered that organizational and people, you are ready, you have the right set of people, the right set of skill, you have the tools, you have the proper documentations that you use in delivering the job, you have the right set of partners, and you have processes of delivering the job policies are actually standard. Then the next thing we'll consider is the external factors that can influence the delivery of the services. What are those external factors? We use an acronym PESTEL to denote the external factors. PESTEL, P for political factors, again, E for economic factors, S for social factors, T for technological factors, legal factors, and environmental factors. So we must consider the political
please, can you come back to that, please, sir?
Hello?
PESTEL, that PESTEL, please.
Yes. PESTEL. What did you say about PESTEL?
Yes, I want you to go back to it. You are rushing.
Okay, PESTEL talks about, we use the PESTEL model to measure the external factors that could affect the delivery of a service for the organization. So under PESTEL, PESTEL is an acronym representing P for political. Political factors talks about like let's say the government's governance system within the nation. For instance, there was an organization that was called GoCada in Nigeria, in Lagos. Am I correct? Anybody remember that company?
Yes,
do you remember?
you are correct.
Yes. So Gokada. Now Gokada entered and looked for a place that should have been a stable system of governance where they should do their business first and is commercially viable. They came to Lagos because by virtue of Lagos, in political terrain of Nigeria, Lagos is a stable state in terms of it is believed that it's being governed by only one party from inception. So they came in, but all of it, there was a change of government. When the change of government happened, they didn't realize that something has happened. They still believe it was the same governor that gave them access to operate in Nigeria. And before you know it, they were nowhere to be found. That's what we refer to as political factors. So people may not want to do business in an environment that have military regime. Why? Because the political environment is not stable. An organization like Total Energy decided to invest in power recently, and they went to Angola to invest in power, and they were interviewed. Why are you not investing in Nigerian government, considering that Nigeria has the largest population in Africa and also in their need of power? But they say there is unstable political policies, unstable policies in Nigerian government is what made them to leave. It is actually everywhere in the news. That was why they left. So in that regard, if you want to do a business, you must look at the environment. Politically, is that environment stable? So the factors, the law of the land, do they really have the right law, the right policies? Are they in place that permits you to strive, your business to strive in that environment? So you look at the political factors before you choose whether to do the business there or not. We look at information technology factors. So what is the benefit of me buying a camera that uses a film in this season? Does it work? If I say I have a camera that uses film instead of what do you call it? A memory. A memory card. The other side will say, oh, I have this, I'm doing business, but the business I'm doing now, I'm going to be importing some cameras, fantastic cameras. You're going to be using Kodak films to work. That's already out of this sense. So when people are moving, oh, some people are saying, oh, under API, I'm using SOAP, JSON. Some people say, I'm using JSON, I'm using REST API. So what platform? What does technology say about it then? The technology you are using now and the future, the trends, does it have possibility of trend disrupting what I am doing? So you have to look at technological factors. Then you have to also consider your what do you call it again? Sorry, your economic factors. What's the economic factors here? The taxes that people pay, the exchange rate that you do. Look at the exchange rate of the thing. So if I'm doing business, it's okay, I want to pay for examination. Why should I charge you examination in Naira if I had not thought Nigeria will be stable at the time when you want to pay the money? So what is the impact if I'm doing business in Naira and I'm asking you business in Naira and I'm paying in dollars? So I have to look at the economic factor of that. So if somebody wants to do investment, what is the impact of this with respect to the economic state of that situation of that locality where you're doing your business? So, or social factors, who are the demographics of the people that will be consuming the service I am creating? What age group am I making this service for? If I'm talking about a mobile application for people to access loans, who am I looking at? Who's my target for them to use mobile app to be accessing loan? Am I looking at those between the ages of 18 to 45, or am I looking at those that is above 50 years and above to take loan? Would they really want to use mobile app to apply for loan and get loan? Who am I designing this? What is the demographics of the people that I'm doing the service for? So also look at the legal factors. What is the legal implication of the business you're doing? You are all here together. A lot of fintechs came in last time. I think some of you here noticed that you started operation. You are calling people to ask them about their phone numbers of when people want to borrow money. It's okay, download the app, register now, then you borrow your money, and then you ask them, do you have access to your contact? You say yes, 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 yes. You click. Next time you start calling their friends and families and enemies and they're about to request for money. All of a sudden, FCCPC came and said, you know what, all apps should go down. So now the FCCPC that came out that time, some of us did not know, nobody, most of the people today if you come to the society and ask, people didn't know there was a company or an establishment known as FCCPC. But because that they believe that people's rights consumer rights was not being protected, that was why they came out and beginning to shout. So the lending business you are doing, do you have the right approval? Are you authorized to lend? Your mobile application, your application you're using, is it authorized to run? So have you secured all the necessary legal requirements to operate within the environment where you are in Nigeria? So those are the things. Environmental factors, the location you are citing the business. For instance, most of the financial institutions today, major financial institutions or banks, commercial banks in Nigeria, the head office is in Lagos. True of us?
Right.
Are we together?
True. Together.
Yeah. So why we have to look at the environment. So if I should go and situate my head office as Sambisa Forest, will I be able to get customers? Will I be able to do well? Okay. So I have to look at those things. The environment. What are the environmental factors? What are the effect of this service on the green energy stuff we are talking about today? So how does that affect us? So you must consider all the dimensions of your service internally, your internal strengths and weaknesses, whether you're using your SWOT or you're using any of the balance scorecard or any of the methods to gauge your strengths internally and weaknesses. Then look at the opportunity, look at the threats that are there, and then try to leverage them. So consider both your external and internal factors before you can say that you are ready to deliver on the services. So let's look at this again. Now, the dimensions was previously referred to as the 4 P's of service management, and these dimensions are well used in ITIL. They are still very much relevant in the IT version 4 right now. They impact upon all the practices of the organization, the 34 practices. They impact upon the entire service value chain, the 6 key service value chain activities. They engage, the plan, they improve, deliver and support, obtain or build or design and transition. They impart on all the 6 of the activities, and they impart upon the service value system, which is the integrated, coordinated, flexible model that links all the activities of the organization together in order for us to deliver the expected value. So, of course, the 4 dimensions are the organization and people, information and technology, partners and suppliers, and then value streams and processes. So we just group them like this at foundation, but when you come to intermediate, we separate them and now go into detail into what we refer to as tangible and intangible dimensions. So the 4 dimensions do not have a sharp boundary. On most cases, they may overlap and they can apply to all the services that is being managed by the organization. What do we mean? The culture of the organization can actually have an influence on the adoption of technology they use. The skill set of the people, the competence of the people can actually influence on the choice of technology that you adopt. You can have a set of people who, by virtue of the competent level they have, they may not want to go to a higher level of technology because they don't have the right set of people or knowledge to manage those technologies. They can tell you, oh, I don't like that technology, not because they don't like it as in like it, but because they don't have the competence to manage it. So the culture can influence that as well. So partners and suppliers you have can actually enhance the kind of tools or technology you use or the quality of service you deliver. All right. Then also the culture of organization can influence the choice of partners and suppliers that you have. Then your value streams and processes, the culture can influence these policies and procedures of work you can deliver within the organization. So what we're saying is that the dimensions actually they interwoven in a kind of. So organizations should holistically consider all the aspects of their behaviors and not focus on only one. But in most cases, we realize some people, some organizations may focus on only one aspect of the dimension and neglect the other. Of course, you cannot deliver an acceptable service if you do not balance all. Having the right set of people, but you don't have the right set of tools, will still limit their knowledge. For instance, let's say you talk about the set of auditing in organization. You might have a very good auditors, but the auditor you have does not have knowledge of technology. He doesn't know how to use tools. The auditor will also be handicapped in doing their work. So that's also going to affect them in achieving the intended objective. So what we're saying is, do not build on only one aspect. You can have all the tools in the world, set up your environment, have the best data centers, but the people to manage the tools, you don't have the right skill set. So you will still not be able to deliver the expected value. That's why we say that the fool with a tool is still a fool, but only more dangerous with the tool. So you need to be sure that you don't just have tools, you have the right people, that the right knowledge to manage those tools that you have. Are we together?
Yes.
Are we together?
Yes.
Okay. Okay. All right. So the first dimension of service management, of course, is organization and people. And this dimension focuses on something like the structure of the organization. What is the structure? What is the organogram of the organization? How is the organization being managed? How is the roles and responsibilities within the organization being assigned and communicated to the people? What is the system of authority within that organization? What of the communication? How does communication happen within the organization? Can a staff just come in and send mail to a senior person without following a due processes? What are the processes that is involved in that organization? What is the culture? These are the reasons why before you recruit people, the human resource is expected to actually organize an orientation to bring, no matter the level you are joining organization from, you must learn the culture of the organization you are joining, irrespective of the nature, the level you are coming from. Are we together? So these are the reasons we do those things. So you must make sure that the roles, responsibility, system of authority, communications are well defined, and they support the overall strategy of that organization and the operating model, or the way the organization is designed to function, the way of doing things. It should be supported by the culture of the organization as well. The culture of organization does not mean a Yoruba culture, Igbo culture, or Hausa culture. Each organization should have their own culture that they are known for. As you are all of you are here inside here now. A Zenith Bank will have their culture, an Access Bank will have their culture, a First Bank will have their culture, even though they stay in the same region. So, but we should see you and see who you are, the way you behave, and the way you do things. So, again, this also other important aspect of the organization and people dimension is the culture and that support the objective of that organization, the capacity, and as well as the competence among the workforce. The competence in terms of the knowledge, the attitude of the people. So competence does not really necessarily mean that you know the operational aspects of your work or technical knowledge. Technical knowledge is only one aspect of your competence. Attitude is another competence within the organization. When you lack attitude of a team worker in organization, it's actually an issue with us. And that's why today organizations can come and say, okay, what set of staffs are we supposed to be recruiting? We have like three sets of staff you can recruit. Number one is called a T-shaped staff. T-shaped are staff that are competent in one area as a technical person, but have a broad general knowledge on other areas. So you have a profound general knowledge in other areas. You know how to report, how to support people. People can report to you. You can supervise people. That means you have. But if you have knowledge, but you can't manage people, then you are actually handicapped as a staff of organization. So in that regard, you don't know how to appraise people. Most of the problem of technical people, that's our problem there. So those things has to be addressed by making sure today that HR should assign an appropriate level of mark, or how do I put it, weighted mark on other areas of competence, not only on technical competence. So competence is very, very important to organizations. So we want to see a culture where leaders advocate for value that motivates people. Okay, we want to see a proper understanding of the interface to ensure there's a proper level of collaboration and coordination between subordinates, between subordinates and the managers, between organization and the partners and suppliers, between the business unit and the developers, between operational team and development team. So we want to see a high level of collaboration among the organization that will guarantee that we achieve our intended objectives. So we want to see that everyone should have a focus on value mentality. So focus on value creation or broad general knowledge is what we want to see within the workforce of the organization. So that's what we want to see in organization and people dimension. So human resources heavily involved in these aspects by making sure that those cultures are established as a way of life within the organization. So to create a culture that suits the objective and the purpose of that organization, that carries the image and the vision and the purpose of the organization. All right. So if this does not exist function, what it means that you can start somewhere to build it, and you can do that using what we refer to as the ITIL guiding principles, which gives you the recommended way that organization should behave or should actually go about doing their business. It does not mandate. It does not. It's not a must. We don't use shall. We use a verb should in expressing this particular guidance. Okay, let's look at information and technology dimension as another dimension to consider information and technology dimension. Apart from information and people, what do we want to see in this place? We said the technology that supports service management includes but not limited to your workflow management systems, your knowledge bases. What is knowledge bases? Because sometimes people get confused about knowledge base and skill set. They are two different things. Skill sets or competence or not is actually treated under information and people dimension, but knowledge base is handled under information technology dimension. Knowledge talks about documentations of organization they use in delivering their IT services. For instance, your source codes of the organization, your what do you call it? Documentations or the guides on how to use an application. So those things is actually one of the most important tool the organization need or artifacts of organization they need in order to deliver the expected value. For instance, a developer may want to deliver a subject, a software based on agile framework and go live with a working software, and they are good to go even without a proper documentation, but I think we say no. So that's why it's important for us to understand the meaning of knowledge base. Knowledge base is the foundation of automation. If you do not have a proper knowledge base of, let's say, FirstCentral have a knowledge base of all incidents or all issues or client support issue that they have treated in the last 4 or 5 years, they can use that as a starting point to build a self-help tool. A self-help tool that should help them to automate the process of some minor issue resolution in order to shift the implementation or execution of those tasks closer to the users in a process we refer to as a shift left approach in service management, making sure we shorten the time taken to resolve an incident by starting it early. So instead of us waiting until the issue is escalated from users to report to FirstCentral, users can resolve that issue by themselves using a self-help tool. So that is normally done when you have a proper knowledge base where you can point those what do you call it them again? Frequently asked questions or challenges you are having or issues that have been resolved before. So with appropriate symptoms that can go back to pick the solution that was used to address those issues, we can automate that processing. That is how RPA starts. That is how automation starts. That is how self-help to all your self-services start, is to have a knowledge base where you can point and pick the solutions to address those challenges. Are we together?
Yes, we are together.
Yes.
Thank you.
Yes.
All right. All right. So we want to see workflow management system, knowledge bases, inventory system, communication system, and some of your analytical tools. Anything that has to do with tools or system is handled under information and technology dimension. Now, in the context of a specific IT service, this dimension include information created, information managed, and information used in the course of your service provision and consumption, and the technologies that support and enable those services. So those are the things that is covered. Now, the architecture, the IT architecture includes the applications, it includes your databases, it includes your communication systems, include their integrations and the use of technology. Of course, this can actually stand you out as an organization, how you adopt a technology. Okay? Any question? Okay, I thought I had a comment. All right. Now, the culture of an organization may have a significant impact on the technologies it chooses. So if you have a culture of maybe early adopter of technology, notice that, oh, some options here, they say once a technology is out, for instance, I was talking about somewhere, an organization was supposed to deliver a course for them on outsourcing, which is ISO 37500. But outsourcing, CBN told them they need to do outsourcing as a course. And they came to me to deliver the course. I said, fine. I look at the outsourcing. I noticed that the outsourcing as a course has been retired since 31st December 2023. And I called the institution. Most of them, the bank is here now as well. I called their person. I said, sorry, by our culture, we do not like to go back to deliver to you what has been outdated. If you can go for something else, why not go for 3700, which can use corporate governance to used to manage those particular outsourced services. Besides, what you are asking for was only a guidance. It's not a requirement. So CBN is not coming to audit you on certification, but on the practices of those recommended guidance. So, and the people was like, no, I want to do. I said, okay, if you want that, I will do that for you. I call PCB or TUV. Let's activate this course and deliver for them. But on the second test, by the time we had a session with them again, what else did they say? I said them, look, you are only. Can you hear me? Hello?
Yes.
We can hear you. We can hear you. Go ahead.
Okay.
Loud and clear. Loud and clear.
Thank you. So what we are saying is that because this thing have expired, our culture is saying, why should I go back now and start teaching you something that have expired? Why not adopt something new? Why should I ask you to go and be certified in COVID 5 if there's a COVID 2019 to do? Why not just go straight and get COVID 2019 certification? Why should I ask you to do IT version 3 if there's IT version 4? So what it means that, but some people can say, no, let's wait until it becomes a bit more stable. We want to wait until when it's about retiring. That's when they jump on technology. So the culture can influence you. It is your choice if you want to do that. But what we're saying is that the culture, which is Ocean and people, has an influence on the choice of technology to use or adoption of a technology. Now, information management. Most of the established organizations today, what they provide is information, including you. Information management is a means of enabling business value, and information is generally the key output of majority of IT provided services we provide is information that we need. What you need from FirstCentral is information. True of us?
True.
Yes. So that's what you need. Now, we now need to understand how to manage this information. So the key consideration here is in this dimension is how this information should be exchanged. How do we protect this information? How do we transmit this information? Most of the issues you raised today was about transmission of information. How do we ensure that this information is being protected? How do we ensure that it is accurate, it is current, it is reliable? So we have to look at that. So how information is being exchanged between different services and between components. In the API you are talking about is exchange of information. How is information being exchanged between FirstCentral and all the financial institutions or the lending institutions that have actually signed up with them in terms of what they get and what they remit to FirstCentral Credit Bureau? The information architecture needs to be well understood. It needs to be continually optimized. That's what FirstCentral is doing, to optimize their information architecture on a daily basis, taking into appropriate consideration for the information security management system, which is CIA, confidentiality, integrity, and availability of your information. So now talk about availability of the information. How reliable is the information? How accessible is the information? What is the timeliness of this information? How accurate is the information? What relevant is this information to us? That is the essence of this, the relationship between FirstCentral and the financial institution. So when you go and see only stale information, or somebody say, oh, I can copy FirstCentral database now, you cannot rely on an data aggregator that copy database today that is not being updated tomorrow. No, it's not possible. So what you copy today become outdated in the next 1 month, in the next 2 months, in the next 3 months. A performing customer today can become non-performing in the next 4 months. True of us?
Yes,
yes.
So that's the thing. So some people can say, oh, let me go to a data aggregator who copies this, have got copy information, but it's not regularly being updated. And that's the reason why we advocate, okay, when you stick with the FirstCentral credit bureaus, it becomes easier to get an accurate and level that is currently being updated. So again, the focus to this dimension is also on security of the information, on regulatory requirement, as well as compliance requirement. So make sure that, yes, we are operating within the ambit of the law. So what does CBS says? What does the NIDA talk in terms of data privacy? What does the NIDA say in terms of that? What can I do with the data that is submitted to me as a FirstCentral Credit Bureau? So those are the things that regulators has put in place to manage or mitigate the risk involved in the abuse of the data that is being submitted from the financial institutions down to the credit bureaus. And those things actually, FirstCentral Credit Bureau is actually adhering to this to make sure that the organizations actually reap the full benefit of the services without incurring more risk. Of course, as a provider of a service, or sorry, as somebody who wants to take a decision as a manager with the auction, there are basic questions you need to ask before you adopt a product or a technology. These are the sample questions you can use to answer to assess the product or even the choice of a partner if you want to partner with an organization. So these are some of the basic questions. Number one is the technology that you are being offered compatible with the current architecture of the organization? Does it align to your long-term architectural plan or design? Maybe you use something like a TOGAF, and what you are using now using TOGAF to for your long-term architectural this enterprise architecture. But if you are now adopting a technology that does not align with the TOGAF, then you are going to be shorting yourself. If you have a 10-year long plan, then your 2-year long plan, short-term plan, or your 5-year medium-term plan or strategy should assist you in meeting your long-term strategic plan. If not, then you are not making any progress. So the different technologies product used, do they work together? Can they integrate? Can they align? The legacy system you have and what you are buying now, can they really talk to each other? Now, how are emerging technologies such as your machine learning, artificial intelligence, Internet of Things, how are they likely going to disrupt your services or the auction? For instance, every service you're providing, you must think about how your service is being disrupted or how you can disrupt another person's services. That's the truth. In the service you are involved, either you are disrupting somebody's services or someone else's service is actually disrupting your own. You have to look at those things. So the technology, how is Internet of Things going to disrupt the adoption of this particular technology? Does this technology raise any regulatory or any other compliance issues with the organizations, with the policies of the organization, or with the information security controls, or with those of the customers? You have to look at those things before you choose the technology. Are we together? And again, we have to ask, is this technology that will continue to be available if at all we have decided to adopt it in the foreseeable future? What is the business continuity plan that will guarantee the existence of this technology or this organization if we should decide to work with them? Not that when we have getting used to the customer or this particular strategic provider, they are no longer available. That's one of the reasons that we have to look at for these questions. Is the organization willing to accept the risk of using aging technology or of embracing emerging or improving technology to be used? Are you ready to adopt the early adopters, or you say, no, I don't want? So does this technology align with the strategy of the provider or the service consumers? We want to ask, does the organization have the right skill set? Very, very important. Now, you can develop an application and hand over to somebody to use, but you don't have the right support. The support team is not knowledgeable. You can never get the value of that particular product. That's the truth of the matter. So you must look out for these particular people. Do they have the right set of skill sets, competent, right attitude, knowledgeable, that they can support us? Because it is at operational level that the value of the service you are delivering will be felt. But if at the level when you have migrated to live environment, the people that supposed to support it was not carried along at the point of development of that particular application, notice that they will not be able to support it. Early life support, ELS, can actually last. It can last for like 2 months, 3 months, and then after that, what happened? Application goes bad because there was no proper plan that actually caters for the entire life cycle of the services from the point of development to the point where it's being retired. Not just when it goes live. Until the service is retired, there must be a plan in place on how to manage the end-to-end of the service you are delivering. So these are the things we have to look out for. Does this technology introduce a new risk or constraint to the organization? For example, looking into a specific vendor, does this vendor cause more risk to us than good? A vendor might be good, yeah, but it introduces more risk to us. We have to look at the risk, the exposure. Where is the vendor coming from? Who is this particular vendor? So these are the things you need to use to ask yourself some basic questions before you choose a product or you choose a particular vendor. Now, IT services or cloud computing, service management and cloud computing. All right. Now, cloud computing is a model for enabling on-demand network access to a shared pool of configurable computing resources that can be rapidly provided with minimal management effort or a provider interaction. This is a way today Auctions has been able to people have leveraged cloud computing in order to enhance the effectiveness and efficiency of their service delivering, especially when you are in an environment that things are constantly changing. When you are in a constantly changing environment, it is advisable, yes, you can adopt a cloud computing system. Now, cloud computing in this regard, you have to now consider decision on this, and all levels of organization you have to decide on whether we should go for cloud computing or not. Cloud computing can help you for fast responses, fast changes. It can encourage what we refer to as loosely coupled architecture, where we have architecture as a code, whereby you can create the environment for us to do our testing, to do deployment, the development of our services, and also to move to production environment and increase on our, how do I put it again, on our resources with a click of button, and shrink when we want, and pay on operational listing, change the architecture of the expenditure from capital expenditure to operational expenditure. So you have to look at those aspects. So when people are always coming for you to do changes, why should I have a rigid architecture? Why should I have a rigid architecture that if I alter anything within architecture, it affects other services, or it kills or lowers the effectiveness of what I already have by what we refer to as a software stagnation in service management? So we want to look at those angles and say, okay, instead of me having a state where I need to reset my architecture anytime I want to do a change, I can now have a process we refer to as a loosely coupled architecture, whereby we can have like containerization or any other what do you call it, dockerization, to use in deployment of our services. So such that anytime changes want to happen, because customers are interested in constant changes, I will be able to meet up with the need of them only if this is approved strategically by the organization, and only if the regulators have permitted you to use that. So you must consider that from a point where all the layers or the levels of action is considered or discussed, both in terms of resource distribution, in terms of competencies and regulatory requirements, the risk involved before you make a choice whether to use a cloud or not. Now, cloud computing changes service architecture. It changes or distribution of responsibilities between the service consumer and service providers and the partners that provide those services. And that is reason today ISO 27018 is out, and 27017 is an architecture that helps us to manage those informations with respect to how to go to cloud. For instance, before going to cloud, that is the 27017 says you must have an exit plan before entering a cloud. You must have an exit plan before entering a cloud. And 27018 says you must learn how to protect the PII, personal identifying information of people who will be consuming the cloud, both the provider of the cloud, the users of the cloud, their information on how you plan to protect the information of these people that you use in the cloud, so that you do not use it in a negative way. So we have to look at those service providers and their partners. It may enable a significant faster deployment of your new or change services, thus supporting what we refer to as high velocity IT. High velocity or high VIT is an intermediate course in ITIL, but cloud computing is one of the tools that has supported that particular thing to enable you to deploy faster when people need something as fast as possible. Instead of saying there's no server, want to buy a new server, you can just with a click of button, you get the server, the space you need on the cloud, and you pay for it. Instead of paying operational, paying heavily on capital expenditure, you pay more on operational expenditure. Of course, that is another decision to be made by the management. Now, that's why we say, considering the influence of cloud computing on organization, it is important to make a decision about the use of this model at strategic level of the organization, involving all levels of the stakeholders, from governance, from the board, from the MDs, from the management, down to the least people that will support that thing, from the governance to the operations level. So both the governance, the steering group, the operational level must be involved in choosing or deciding whether to go with cloud or not, based on different challenges or risks that it introduced to our system. Now, cloud computing have a very big impact on the service management. Now, one of those challenges we have to deal with how cloud computing replaces some infrastructure which was previously managed by the service provider with a partner's cloud services. So instead of having a big data center where servers are stacked now, you know that, oh, you don't need that again. You can now have a cloud where you don't need data center in your environment again, but it's another person's location. Somebody was asking me, oh, cloud means that you put something in the cloud. I said, no, cloud does not mean you put something in the cloud. Rather, it means you put your servers in another person's location, another person's environment, another person's compound. That's a simply way of explaining what it means. So it actually replaces the infrastructure previously managed by service providers with a partner's cloud service. So there is no need of having big, gigantic servers in their environment if you are using cloud. It also leads to decrease or removal of the need for infrastructure management expertise and resources. Now, growing up in IT, I see where a lot of people were focused on Linux experts, CCIE people, and so on, those technological these days. But today, the use or the need of the people are gradually being reduced and shifted to co-location centers or data centers to be there. So organizations do no longer need them again. The rate at people were looking for CCIE people for network or network Linux people that can actually configure systems and so on. Many organizations today do not need their services again. So we are saying that it decreases or removes the need to hire a Linux expert in your auction. For instance, an auction like FirstCentral need to have a set of Linux people now who sit in the organization there, but that may not be necessary considering the use of cloud and computing. Now, it shifts focus of service monitoring and control from in-house infrastructure to cloud. Instead of having security people, physical people guiding the data centers, no, we shift it into having monitor network on the cloud or security of information in the information security, how do I put it again? In the cloud now, or digital information security aspect is what is now being invoked. So it should focus from monitoring control from in-house infrastructure to the cloud. So it changes the cost structure of the service provider, removing specific capital expenditures like buying servers, and introduces a new operating expenditure because you have to be paying by all what people use. As they use, you pay per use. So you're able to change that cost structure. Instead of paying more in capital expenditure, you pay more on operational expenditure. Then it also introduces higher requirements for network availability and network security. That's why those that involve in information security today are actually hot in the market. Those involved in network availability, management of network and information security is hot in the market because of this particular cloud computing. It also introduces new security and compliance risks and requirements, which is applicable to both the person providing the service, both the partners of the service providers or cloud service providers, and even the users of the service has to be involved in protecting their information they use in the cloud, based on the guidance of ISO 27018. And again, it also helps provide users with opportunity to scale their service consumption using a self-help services or via a simple standard request, or even without any request. Like somebody can sit down every day and say, I'm doing password reset. Password reset as solution, you do 20, 50 password reset in a day is as good as the person doing what we refer to as low-level work in organization. So this can be automated using by adopting cloud services. Can automate those systems. Individuals can actually reset their password by themselves, and also the service desk staffs can offer more valuable services when contact is made with them, instead of them sitting down and delivering low-level work to organizations. Now, cloud computing affects practices. Now, practices are affected by cloud computing. Some of the practices affected include your service level management, which we're going to look at on the third day, measuring and reporting of the services, information and security management as a practice, service continuity practices, supply management. Of course, any of these practices, be it service request management or service catalog management, can be affected through by your cloud computing, depending on how you decide to use it. Okay, that brings us to the third dimension of service management, which is partners and suppliers. Any question? Any question? Okay, we have barely 30 minutes to go.
You can proceed.
No. Very technical presentation. No, sir.
All right, thank you. Now, the partners and suppliers, every option and every service depends to some extent on services provided by other organizations. You need partners to do your business. You need suppliers to do your businesses. Now, this dimension covers relationship with other organizations that are involved in the designing of the service, that are involved in the development of the service, in deployment of the service, delivery of the service, support and continual improvement that are involved in the entire life cycle of your service delivery. That's what all the partners or suppliers that are involved in the entire life cycle of your service delivery is what we're looking at. So, of course, these partners and suppliers can be guided with a service level agreement or a contract which you sign with them. So, this can range from formal contracts with a clear separation of responsibility to a flexible partnership where the parties involved in the service delivery can share common goals, can share common risk, and can collaborate to achieve the desired outcome for that particular service consumption or service delivery. So, you can have a partner like FirstCentral Credit Bureau have partners they use. They have a partner they use in delivering service. So when there are some service you want to do, it's okay, please, they have to go back to their partners and confirm the partners can assist them in meeting up with that request. Then they come back to you. So in most cases, again, you as a provider of a service, you also have FirstCentral maybe as a provider of a service or as a partners, depending on the level that you have with them. So you must make sure that, before any request is fulfilled, that the partners and suppliers are carried along to promise what you can realistically deliver. And the activities of both the partners or both the suppliers are actually documented in a contract or in the service level agreement, stating clearly what each role has to play. Now, if you are signing with FirstCentral Credit Bureau, I understand there is an SLA that you will sign. The SLA will apply clearly on the role the FirstCentral will play in making sure the service is available. All right? And also, it also says the responsibility of you as a lending institution must also fulfill as part of the service level agreement. Then this can go back and forth until we have an agreement and then we'll document it. It is always better for a provider of a service to under-promise and over-deliver than over-promise and under-deliver. That is why you must be very careful when you are drafting an SLA by making sure that all what you have promised in the SLA is what you can realistically deliver. And SLA is a tool to measure the minimum level of service delivery. You do not base your judgment on that I've made SLA and you relax. No. SLA is just a minimum level of service delivery. That's what SLA is all about. So use it to manage or monitor your service to make sure that you are at worst, you are at minimum. It doesn't mean that it is optimal. Your SLA actually is the maximum you can deliver in your service delivery. So when you have that mindset, you should be able to deliver a service that exceeds the expectations of your consumers. Are we together? Are we together? Are we good?
I am good. You can proceed.
Yes.
All right. So of course, all right. There are forms of cooperation and outputs, responsibilities that you can. When a goods is involved, if something involves like goods that is supply, or you are in a bus, you are going home, and now you buy pure water on the road. They give you a pure water you drink. You are not expected to see that customer again. So the level of collaboration there differs. The person, you are telling the person, why can't you give me change? This, you lack saucy. Look at the way you are giving me change. The man don't need to have saucy because he's not expected to send to you again tomorrow. He may not meet you again. So when you involve something like, you have to understand that. But when you form somebody at a strategic level, you must understand that at that level, the sources of the person and your own sources can come together. So meaning that we are chasing the same vision. Today, FirstCentral want to see you as being that strategic partner, whereby that when you succeed as a lender, FirstCentral succeed as a repository of people that actually manages your data. So when you are not doing well, FirstCentral is not happy that you're not doing well as well. So we want to have that level of collaboration with you in such a way that we can promote the visibility between our relationship as an organization. Okay, so it can be goods supply. When you supply the goods, of course, supplier takes responsibility of that. Again, something for achievement of outcome depends on the customer. So whether the customer got the outcome or not is the business. You just give them if it's a phone, you give them. You have seen it. If it meets your demand, good. If it doesn't meet, it's your business. So formal supply contract or invoices can be shared. Procurement of computers or phones could be an example of that. Once you buy your phone or this and you go, they are supplying you. It's not left for you whether you meet a target or not. But if you have an arrangement with a company that supply you a computer, no, it's not like that. The failure of that computer not to meet up, you know that you are going back to return it and the person has to meet up with this. So you must increase on the level of collaboration between your partners and your suppliers before you can achieve the expected level of value. Now, there are different strategies for cooperation. Now, forms of cooperation depends on strategy and objective for customers' relationship. Strategy to using partners and suppliers should be based on the goal of the organization, should be based on the culture, should be based on the business environment, and of course, there could be some influencing factors on the choice of these particular corporations. Let's look at, you say you want to be a strategic focus. Strategic focus, for instance, financial institutions, their major aim is to stay as self-reliant as possible. Now, if I ask you, let's say financial institution here, does the security people in your organization, do they are they in your payroll? Are you the one that pay the security people in your organization? Can you hear me? Can you hear me?
Yes, we can hear you.
Yes, we can hear you.
They
They are not in the
Okay,
payroll.
thank you.
Because
I want to ask a question.
outsourced.
Which bank is here?
Can hear you.
Do I have anybody from Zenith Bank here? Do I have Zenith Bank here?
Hello, Chairman.
Yes. Are you from Zenith Bank?
Yes.
I want to specifically, I want to ask you, your security people in your office, are they in your payroll? Are you the one?
No.
Is Zenith Bank paying them directly? Are they employees of Zenith Bank?
No.
Okay.
anyone from
We can't see your slide.
Why?
We can't.
Someone shared his screen.
Hello, sir.
Okay.
For us, security is at source. So you will pay to the company and then they pay to their staff directly.
Okay. Can you see my slide now?
Can't see.
No.
No.
Someone shared his screen.
Desktop window is covering everything.
We are not seeing it.
We can't see your
We are
screen.
seeing somebody's screen.
We
We
can
can only
see
see your window. We can see your desktop.
You can only see your window.
We can
See
see
now.
Like you're sharing.
Yes.
Someone else
Like
is
you
sharing.
minimize the.
Oh, if someone is sharing, let the person remove the thing. Who is sharing?
Mr. Babandi Gambo.
No, the message was that somebody. The message was that somebody was trying to restart.
Babandi Gambo should stop sharing this.
Babandi Gambo.
Okay, we can see you now.
Okay, now.
Yes,
Okay.
you can see your screen now.
All right, thank you. All right, now I want to explain something here. Now, the bank does not want to entangle with themselves with the issue of security. For instance, in most cases, because we understand, for instance, where you have security people guiding your place, maybe your banks and everywhere, sometimes security, one of the things they secure out of your environment is diesel. Am I correct?
Yes.
Yes. So sometimes they secure diesel out. Now, when they secure diesel out of your environment, you now go and arrest them and carry them to police station. Police will be very happy that Zenith Bank brought some people to them, because they will collect more money from Zenith Bank than the poor boy that collected the diesel to go and use and eat. Am I correct? Are we together?
No,
Yes.
We're together. Thank you. So based on that, what the bank does is to outsource security. So the essence of that's a strategy focus to focus on their core competence as a bank, or to stay as self-sufficient as possible, so that they don't need to be involved in those things. So if anything happens in security, Zenith Bank will look at who is the body that they outsource, like maybe Halogen, I don't know the body that you use, who you outsource your security. That is the person that Zenith Bank will hold accountable, not the people that stole that thing in the bank. Are we together? Okay. Then number two is corporate culture. A corporate culture, long-standing cultural bias is difficult to change. So organization can tell you that I cannot do business with you because you have not stayed 5 years as a consulting company. If you have not up to 5 years in business, I cannot give you business. So based on that, I have some organizations that are here now in this call that they will tell you that if you have not done 5 years in business, please, we can't give you business, no matter how good you are. So that's corporate culture. It could be resource scarcity. Resource or skill set in short supply can be acquired from suppliers. When CCIE was a hot cake before, when you need it maybe as a Cisco partner, you needed to get some CCIE guys, you go to Cisco direct, write them. They are the one to now look for people and send you some CCIE, those that have done their CCIE lab and pass, they can give you the list. Because why? Because it is in a short supply. Are we together? Then when it involves cost concerns, it is more economical to source a particular requirement from a supplier. So you might decide to say, oh, instead of me, for instance, most of the people today, let's use a First Bank, for instance, that is using a core banking application like Finacle, may want to do a customization. Then they now say, okay, based on cost concern, they can look at this and say, okay, who is the source or particular this requirement I'm talking about? They can say, okay, instead of me going to give any other person to customize, let me give the CWG, who is the partner of the Infosys, to provide this particular service. They can go there and say, okay, it will be cheaper for me. Cheaper may not be that they are paying cheap, but in terms of the cost, overall cost of rework, or what we refer to as technical debt, because anytime you deliver a service and you have to pay back to do the service again, both the time taken to deliver the service again is actually a cost on the organization. So they don't want to bear that. They can say, okay, this person have done it before, so it's better we give it to this person based on based on cost concern. This person is more economical. Let's give it to them. Or somebody that buys in large quantity, they can go to the person and say, it is better to buy these gift items from an importer than going to a retailer who will now be reselling at a higher price. Or subject matter expertise. Let's risk it to use a supplier that already has an expertise. If you have done it before, where have you implemented this particular thing before? If you have not done it before, we cannot use you. So they are only using you because you have done it. You have experiences where you can measure, where have you done this before? I've done it in Zenith Bank, in First Bank, in Eco Bank, in this. You say, oh, then let's give him a chance. That's the thing. So external constraints, regulatory or policy constraint might impact on the strategy. Financial institutions have been mandated to do CMMI. Anybody here, is it true? Is anybody aware of that? CBN is coming to audit you on CMMI, capability, maturity, model integration. Okay, maybe not the right set. Okay.
So they've not been any circular to that.
That's true. That's part of what CBN is coming to audit your banks right now. In the next audit, will be audited on CMMI. So based on that, the bank is not doing CMMI because it's going to give them competitive edge in the market. No, they are doing because it's going to give them more market or more share of the market, but they are doing because regulators say they should do so. The same way, sometimes, assuming regulators say, okay, you must use 2 credit bureaus when you conduct a credit search. If you don't do that, there's a fine. If the fine is bigger than what you will pay to the FirstCentral Credit Bureau and other credit bureau, you have to say, okay, instead of that, even if I'm not getting value, maybe let me use based on it's a regulatory requirement to do so. So that's what we mean by external constraint. Regulatory requirement is a constraint. It could be in form of demand patterns. So another strategy for in choosing or making choice of partners and suppliers could be in when it involves demand. demand for something that is seasonal. Let's say an umbrella, for instance, currently could be in the rainy season or thereabout, or activity or demand a service that might be seasonal or it might be variable, or people are logging in to your site, to your network. You see that your network is very slow in the morning hours between 8 o'clock and 9 o'clock. And then after like 10 o'clock, everywhere stabilizes. Now the question is, say, go and increase the bandwidth. The IT operation manager will want to see, is it justifiable to increase the bandwidth based on that? So why should I increase the bandwidth if that's the only time and the thing is okay? Is the cost implication okay? You can say, okay, what else can I do? So they can use a demand pattern to actually change the way people log in to make sure that everybody does not log in at the same time, instead of me going to invest that particular resource in increasing the bandwidth. So it can be a demand for something that is seasonal or something that is actually variable. Can decide a partner to use in that regard. Then another way of using partners and suppliers in what is called SIAM. SIAM is called Service Education and Management, which there are 4 ways you can use Service Education and Management. You have what is called Service Guardian. You have what is called Retained Organization. For instance, let's assume that which other bank that is here? Which other bank that want to be recognized? So you are not talking now. When I call another bank,
You have
not been asking for microfinance bank.
Microfinance, tell me, yes. Oh yeah, microfinance bank. Tell me, mention your name now.
Daylight microfinance
Correct.
Bank.
Yes. Okay. Okay. Now let's assume that Daylight, also microfinance bank, or what the name you call, want to engage on the services of FirstCentral Credit Bureau. They engage FirstCentral. They engage NIMS. They engage. You say what?
Petron Microfinance.
Okay, correct.
Microsoft Nigeria Limited.
Okay, you will pay for all the adverts.
Green Bond is here.
Yes.
HBA Microsoft Nigeria Limited is here.
I say you will pay for Central for all the adverts now.
Don't worry.
So let's go. Thank you. Now, what we're saying is, assuming you want to engage on the services of FirstCentral, you want to engage on services of maybe another company that is providing you maybe loan application. You want to engage on other services of people that provide you like NIMS, or you have like 5 different companies providing services to you, and you don't want each of them to be speaking directly to your database. You can create an integrator that sits between you and those people. So those integrator is where they will plug all their services. So that integrator is where they stop, each of them. You now consume the whole of the 5 services as a utility. That is what is called service integration and management. So it's one method of action may use this partner and supplier dimension is in service integration and management. This uses an integrator to help ensure that service relationships are properly coordinated. So service integration and management it can be kept inside, but you are the one managing. That is what is called as retained organization. So you didn't outsource it, you manage it internally because you have the skill set, you have the resources to manage it. You can do that. You can also decide to say, no, out of these people, let me give FirstCentral access to manage my integration, even though they are providing one of the services for me. So FirstCentral will provide one service and they manage other people. So because they are your trusted partner, that is what is called what you call it again, service guardian. So they can be one of the people providing the services, at the same time they are also managing your integrator. So you can do that. So if you trust the partner very well, you can outsource your integrator to them to manage it for you. You can have a situation whereby somebody can just come in and manage only integrator but do not provide any other service for you. That's why we say that you can use partner dimension to achieve this particular thing. Are we together? Are we together? Are we good?
Yes.
All right. So, thank you. So, service integration and management may be kept inside the organization, but it can also be delegated, or it can also be given to a trusted partner. So, again, all it means is to consume the service as a bundle or as a utility. Then the last but not the least of the dimension is called value streams and process dimension. Now, the value streams and process dimension applies to both the services, the service value system, which is in general, and the specific components of the service value systems, like the product and services, or even the value chain activities. So in both contexts, the service value stream defines activities. In both contexts, it defines workflow. Of course, that's an exam question normally for those that may want to write the examination. They ask you which of the dimensions of service management uses workflow. Yes, we have workflow management system in information technology dimension, but where we have the actual workflow is in value streams and process dimension. So it talks about controls, it talks about procedures, it talks about need, it talks about coordination of activities that needed to achieve the objective of that particular service. So the dimension focus on what activities the organization undertakes, how they organize their work, as well as how the organization ensures that it is enabling value creation for all the stakeholders effectively and efficiently. Again, what is the difference between effectively and efficiently? Are we together? Can somebody help me this? We always use these terms. Do you understand the difference between effectively and efficiently?
We do.
Okay. So is it the same thing?
No, it's not. It's not. He's doing the right thing at the least cost to you.
Is what? What is that
doing
one?
Doing the right thing at the least cost to you.
So which one ensures you do the right thing? And which one ensures you use the least cost?
Efficiently, cost. Effectively, the right thing.
Fantastic. And that's the reason why we tell you people during audit, auditors look for suitability, adequacy, effectiveness, and efficiency of your services. But that's internal auditor. But external auditors look for suitability, adequacy, and effectiveness. They do not look for efficiency. That's a free listen I gave you now. Are we together? Are we together?
I'm with you. I'm with you.
Thank you. So ITIL gives service providers an operating model that covers all the key activities required. Is somebody talking?
Continue, sir. Continue, sir.
Thank you. ITIL gives service providers an operating model that covers all the key activities required to effectively manage products and services, called the ITIL service value chain. So the value chain, the chain is inside the system. So the service value chain operating model is generic. However, in practice, it can follow different patterns. Of course, these patterns within the value chain activities is what we refer to as value streams. There are 6 key activities which we are going to be looking at tomorrow. It's called engage, plan, improve, deliver and support, obtain or build, or deliver and support. So these are the things that the 6 activities we want to look at, how they flow in converting input into output and then delivering the expected value at the end of the day. So what is the value stream? A value stream is a series of steps an auction undertake to create and deliver product and service to consumers is what we refer to as a value stream. It is more like your workflow you create. From the point where customer call and say, oh, I'm calling FirstCentral to sign up with FirstCentral Credit Bureau to use their platform. The question is, the person that received the call will ask, so what exactly do you want to do with what of the services of FirstCentral are you interested in? And which one do you use? How do you want to consume the services? What do you want to achieve with it? So how the question that they ask is collected at engagement level. That is going to be passed on to planning stage to understand the vision, to understand the current status of the consumer and the improvement direction of the consumer, and use those questions to profile a solution on which part of product that meets the need of that particular consumer. That's why you must have an understanding of the shared vision of the consumer. So whatever the planning gives out will now be passed on to design and transition, that we design the way the service is going to be until the service is start transition to production environment. Now, to transition it or to create the component is obtain or build. these are the people that will now come and say, do we need to build this from the scratch, or do we need to buy off the shelf? How do you want to carry out? For instance, how do you want to integrate the services of FirstCentral? Do I need an integrator? Do I need somebody that come, or do we have capable hand that will work with development team of FirstCentral to integrate our services? So you're able to do all those things until you are able to go live. But when you are live, if the call comes in as a demand, not an opportunity, that my service is down or I'm not able to make call, then you are able to respond and go to deliver and support who offers solution for you. I mean, there are the steps you take from the point where the call comes in to the point where the user says, I am satisfied, is what we refer to as a value stream. Are we together? Are we together?
Yes, sir. Yes, sir.
Thank you. Okay, now a value stream is a combination of organization's value chain activity that 6 of them can be combined. You can choose 2 out of the 6. You can choose 3 out of the 6. You can choose only 1. For instance, if you call somebody in service desk of FirstCentral and they pick the call and the person was able to resolve your issue that time, then that particular value stream ends there. You get value. But if he's not able to, the person can say, okay, he can escalate to the support team. Support team can now provide additional support until it is closed, until when the user says, I am satisfied. So the cycle continues like that. So we are saying that value chain activities, a value stream is a combination of organizational value chain activities. Identifying and understanding organizational value stream is very, very important or critical in improving the performance of the services that is being rendered by the organization. So, of course, structuring the services and product of the organization around their product portfolio around a value stream gives organization a clear picture of what they deliver, how to continually improve their services. And value stream optimization may include process automation. It can also include adoption of emerging technologies or ways of working to get effectiveness or with efficiency or enhance user experience and eliminate waste. Value stream should be adoptable. Value stream should be continually improved. So how can it be adoptable? It can be adoptable if you document it. So do not say that your workflow is in your head. You want to see it live. You want to see it that people can replicate it and get the same result. So again, we just have a minute to go, right? All right. Now, processes. What is a process? A process is a set of interrelated or interacting activities that transforms input into output. A process takes one or more defined inputs and turns them into a defined output. Process defines sequence of actions and their dependencies. So when you have a value stream, inside a value stream, you have an activity. Inside an activity, you now have a process. Inside a process, you now have a task. That's how it groups them down. Until if you are not able to break them down like this, you might not be able to implement it well within organization, and we might not be able to improve on the service, because we want to see where work is being delayed. We want to see where we are having those delays. If somebody say, oh, my data is not going on live, at the same time, where is the work being delayed? We want to look at the entire value stream from the point where the customer released the data, to the point where it goes live. So we want to see the entire workflow to see what happened, to know where delays are coming in. That's what we refer to. So the process is a set of interactive activities that transforms input into output. And again, a process takes one or more defined inputs and turns them into a defined output. Process defines sequence of actions and their dependencies. Processes describe what is done to accomplish an objective. And a well-defined process can improve the entire productivity of an organization within and across the organization. They are usually detailed in procedure. Now, it cascades in 3 layers. The policies of the organization guides the establishment of processes. The processes aids in creating the procedures or the methods I be using in delivering the service. So for the governance of the organization, they give out policy, which gives out the intent of management, intent of the organization in governance is stated in the policy. Then when you now come to the steering group, they give out the processes, because they also the one that monitors or controls the operational activity. Then when you now come to operational level create a standard operating procedure, SOPs, or procedure of doing work, or method, or a structural approach of getting the job done. Of course, it is more detailed. All right. So the same structure of the value chain or value stream, process, procedure, work instruction applies to services to successfully create, deliver, and improve a service. Again, this is where we are stopping. This is the last slide we are doing, is talking about the external factors. What are the external factors? I've explained that before. Other factors that need to be considered besides the internal factors of the organization. The dimension is internal to the organization. The external factors is not within the control of the organization, but you have to manage them. Political factors responsible for tax, fiscal policies, trade tariffs, change of government, and so on. Economic factors focus on inflation rate, interest rates, and foreign exchange rate, and so on. Social talks about the cultural trends, demographics, employee expectations, and so on. Then technology talks about automation, research and development. Legal talks about the laws like FCCPs I mentioned there, health and safety standards, labor laws, and so on. Trade union. Environment talks about the geographical location, the climate change, environmental office, emission legislation, and so on, that governs the environment, the place where you're delivering the services. So collectively, these factors influences how organizations configure their resources, address the 4 dimensions, as well as the service management. I think that brings us to the where we'll stop today. But answer the question here so we can close. You can answer this question for us to close. What's the answer? Which service management dimension is focused on activities and how they are coordinated? What's the answer?
Organization and people.
Do we agree?
And people.
Yes. Coordination. Yes. Coordination.
Coordination.
Yes.
Value streams and processes.
Value streams and process dimension.
Information and technology.
Not information and technology. Which service management dimension is focused on activities and how activities are coordinated? Is value streams and process dimension. Okay.
Okay.
Which is not a key focus of information and technology dimension. Which dimension here, which activities here is not considered under information and technology dimension?
Focus of information.
Roles and responsibilities.
Roles and responsibility. Beautiful. Roles and responsibility. Which dimension considers roles and responsibility?
That's organization and people.
Organization and people. Are you a HR? All right. Okay. Thank you so much. That brings us to the end of today's class. Do you have any question for me?
Well done, sir.
Sorry, I joined late.
Need the slide, please. The materials.
That one costs you.
Hello, sir. How do we get
the meeting, the class is recorded. After the event, we will share the recorded class with you. For the materials, we will make the arrangement with the instructor.
Okay. How do we get this class? Because at some point we have
we'll make the arrangements. We'll make the arrangements. Thank you. But for the recorded material, you will get it after this training.
The recording can be shared.
Yes, it will be shared, sure.
Okay.
At the end of the class, you give us all your email address, then we'll share the recording of the class. All right. Thank you very much. Thank you for your active participation. Mr. Paulos, thank you very much.
Thank you.
See you all tomorrow.
All right.
Tomorrow by 10.
Yes, ma. Same time, 10 a.m. dot.
Madam Mary, please, we need the slide.
Thank you, Mary.
We need the slide,
please. Don't sir. We'll try.
Have a nice day.
Same here, ma'am.
You too, ma.
Bye-bye.
Have a nice day.
Hello.
Have a nice day.
We'll be expecting the slide, though.
Have a nice day, sir.
Thank you, madam.
Have a nice day, sir.
Have
Have a nice day.
this way.
Tomorrow,
Have a nice day, everyone.
Have a
Nice day, Amina and the rest.
Thank you. Have a nice day.
Okay, have a nice day. Thank you.
Nice day.
Have a nice day.
Thank you for the highly technically thank you for the highly technical representation. We hope we get the flight.